So, good evening and welcome everyone. Before we start, I would request team to play the ICI motto.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः श्रितः सर्वे तदूनात्यपि कश्चन एतद्वैता 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 एतद्वैता.
So, good evening everyone. I welcome you all to this very unique program wherein we are going through a topic which is the year end compliances to be taken care of. And we have two faculties with us who are going to take us through this session. But we are also joined with us, our secretary of WRC. Chairperson of WRC is stuck somewhere, so we could not have him. But currently, we are having Secretary WRC and Vikasa Chairperson with us. So, firstly, I would request Secretary WRC CA Bishan Shah for his opening remarks.
Yes, sir. Thank you so much. But Rajesh bhai, are you going to have words with the participants?
No, I will have
Vote of
He
thanks.
is
at
vote
the
of
end.
Vote
Yeah.
of thanks. Great, great, great. So, Chairman, dynamic chairman of the WRC in this 75th year of the WRC, 75th chairman, we are so much fortunate that under his leadership, we are going to witness a impactful year and ably supported by Vice Chairman of the region, CA Rikain Patelji. Again, our dynamic Vikasa Chairperson, CA Rajesh Agrawalji, who is always there to help our Vikasa wing and students. Under his able leadership, students are guided in a positive direction. Our today's learned faculties, CA Himesh ji and CA Varun ji, as year end is approaching and we must have to gear up ourselves for preparation and what are the things which are required to be completed before year end. So with that object, Rikin Bhai has organized and planned this program, which must be, which is, I can say, very much useful for the membership. So thank you, Vice Chairman WRC Rikin Bhai Patel, for organizing this wonderful program. And under the leadership of this year, since it is an impactful leadership, we always think on I for innovation, M for mindset, P for professional excellence, and A for adaptability. We need to inculcate AI and technology and we need to adapt new things. That is what the object of our chairman. C for the collaboration and T for the transformation. So this unique year will definitely reach not even WRC a greater heights, but our membership as well. With these words, I welcome all of you and over to you, Rikin Bhai. Thank you very much.
Thank you so much to our Power Pack Secretary of WIRC, CA Bishan Shah. Thank you for your words of wisdom. And definitely, all the members of the region would get a very impactful year this year, and the programs would be very impactful as our theme suggests. So, moving on to our program, we have two expert faculties today with us, and I'll just briefly introduce them turn by turn. So, firstly, we have CA Varun Fitter, who is taking us through the GST compliances which need to be taken care during the year. So, Mr. Varun is a chartered accountant. He qualified at a very young age of 21, and he is practicing into GST, customs, excise, all the indirect tax practice. He leads the GST advisory of his firm and also litigation and audit division at Shah Mehta and Bakshi, which is firm at Vadodara. He regularly represents before all the tax authorities, and he has been doing it since a decade or so. He is also a faculty trainer for all the GST officers at NACIN Vadodara, and he also takes up session at MS University and other universities of Vadodara. So, with that words, we welcome CA Varun Fitter. And our second faculty for the day is CA Himesh Gajjar. He is a chartered accountant and partner at Shah Mehta and Bakshi, and with an extensive experience in audit and assurance. He specializes in Ind AS, financial reporting, group consolidation, and IPO related assignments. He is a rank holder and an academic achiever. He contributes to professional literatures of ICI initiatives. His expertise span is diverse from corporate sectors in India and overseas, delivering high quality of advisory and assurance services. With that words, I welcome CA Himesh Gajjar. I think it is over to you guys. Himesh bhai, you are going to take up first.
Yes,
Okay,
I'll
over
take
to
first.
you, Himesh bhai.
Thank you, Rikin bhai. Good evening, everyone.
Good evening.
Good evening.
Just a minute, I'll share my screen. Okay, so it is my privilege to be here, and this moment is quite special to me because this will be for the first time. I'll be taking a webinar for the Mother Institute W and WRC. So, and thank you, Rikin bhai and Team WRC for giving me this opportunity. And I'm quite grateful to the Team WRC. Now, the topic for discussion is financial reporting, year-end consideration, and beyond. So, you have received the flyer. In flyer, they have mentioned that it is year-end consideration, but I have specifically added the word beyond. The reason is when we talk about
Himesh bhai, just if you can put the full screen on so that we can see the presentation very clearly.
just a minute. Okay, so when we talk about a year-end consideration, the instinct is to think in a checklist kind of an approach that whether impairment testing has been done, provision has been checked, and whether disclosures have been updated. But let us be honest, in today's time, audit is not only about a checklist, it is more about a judgment. Specifically in Ind AS, when we see that there would be hardly any Ind AS in which you might not require a judgment. So each and every one Ind AS has a scope for a judgment, and so is the audit. So when we think about a year-end consideration, we cannot say that year-end consideration only includes the checklist kind of an approach. So and beyond, by what and beyond I mean that I will be taking few of the aspects. Of course, we will consider that what are the changes that has happened in the Ind AS amendment, because there are 4 or 5 Ind AS that has been amended. Then we will cover the impact due to the new labor code, because this is the major cause of concern for each and every industry, is because this is something which has come in 2019. They have already notified the same, but in it has come into an existence as of now. So it has a major impact in the financial statement of most of the companies. Then we will cover the change in small company definition and what is the impact on the industry and what is the impact that practitioners need to take care of it. And post that, if time permits, we will cover few key ASC, recent key expert advisory committee opinions and key observations of the regulators, because audit, as we have discussed, is not only about the checklist. So our main area of focus will be the first three part, that is key changes in Ind AS, impact due to labor code, and the change in the definition of small company and its impact. One more disclosures. I am taking this from the remote area of Bangalore, so there may be some of the internet connectivity issue, but I have made sure that there won't be any technical glitches or won't be any internet glitches. But everything is not in our hand, just like the audit. So, in case if that happens, I'll request Team WRC to at least inform me because I won't be having the proper idea about the internet connectivity. Okay, fine. So, without much ado, let's get started. First thing, first key changes in Ind AS. It is about Ind AS 1, the classification of liability. Now, the change is, it seems a simple because a few weeks back when I was discussing about this change with one of my colleague, I found that there is some misconception that this is a very simple routine change, but it is not so. How? We will uncover the same that this is not as simple as it seems. So the amendment under Ind AS 1 aims at providing guidance in relation to the classification of certain liability as current or non-current. In addition, new disclosures for liability which are subject to covenant will be required. So first thing, we'll see what has been changed. First thing is what is the before amendment criteria, that entity amendment criteria for the current liabilities. So an entity shall classify a liability as current when it does not have an unconditional right to defer the settlement of the liability for at least 12 months after the reporting period. So practically, the word we were obsessed, the index, the were obsessed with the word of unconditional. Now, what used to happen is, in practice, in reality, when you see that there is no loan agreement or there is no liability, which you can confidently say that it is an unconditional. So it comes to the management, that management can assess that whether this liability is unconditional or it is not an unconditional. So there was a technical impossibility unless and until it is a transaction between the related party. For an example, if related party has given loan to the reporting entity, in that cases you can say that it is an unconditional that loan can be an unconditional. But in most of the cases, if it is with the banks or financial institution, it is near to impossible that company will have an unconditional right to defer the settlement. Now that was the cause of concern, that was the issue, so that has been amended. And what was the new definition of the classification of current liability, that an entity shall classify a liability as current when it does not have a right at the end of reporting period to defer the settlement of the liability for at least 12 months from the reporting period. So the amendment has removed the requirement of right to be conditional, and the amendment has added that right to defer the settlement must exist at the reporting date, and that right must have a substance. So simple, the word unconditional was removed, and the right word has been added with the pretext that it has to be at the reporting date, that is in most of the cases of entity 31st March. Now this is a general definition that now the liability can be classified as a current if the entity has a right at the end of reporting period. So as on 31st March, you are supposed to check that whether an entity has a right or it does not have a right. The word unconditional now does not matter. Now, there will be some of the liabilities with the covenant. So, in these cases, we have covered that the right is unconditional, or now we'll cover classification of liability with covenants. In general terms, it is condition. So, a company will classify a liability as non-current if it has a right to defer settlement for at least 12 months after the reporting date. This right may be subject to some of the conditions. Only covenants, that is conditions, with which a company must comply on or before the reporting date affect the classification of liability as current or non-current. Now, quite theoretical, but what this para wants to say that there may be some of the conditions attached to the loan. Now, as on the reporting date, you are just supposed to see that this is the conditions as on the reporting date, and reporting entity is satisfying those conditions. If they are satisfying those conditions, then they can classify it as a non-current. If they are not satisfying those conditions as on the reporting date, then they will classify the liability as a current. Conditions with which company must comply after the reporting date. So now we are talking about the event after the reporting date. So post 31st March scenario. Do not affect the liabilities classification at the reporting date. Simple. So conditions with which we need to comply till 31st of March are relevant for the classification purpose. But the conditions which we are supposed to satisfy after 31st of March, they will not affect the classification, but it will now attract a disclosure. So, however, when non-current liabilities are subject to future conditions, covenants, companies will now need to disclose information to help user understand the risk that those liability could become repayable within 12 months after the reporting date. Now, this was quite a theoretical. We'll understand this with an example. So, a company has a loan that is repayable in 5 years. Now, the loan includes a covenant, that is condition requiring working capital ratio of at least 1.5 as on 31st of March and 1.7 as on 30th of September 2026. The loan become repayable on demand if the ratio is not met at any of the specified covenant testing dates. Now there are two things. The company has taken a loan from the bank. Bank has given two conditions that you need to maintain working capital ratio of 1.5 as on your reporting date, that is on 31st of March, and 1.7 that is on 30th of September 2026. So these are the two conditions attached to the loan. Now, how that will classify that, how that will impact our classification? That company is preparing its annual financial statement for the year ending on 31st of March. The working capital ratio on that date is 1.6, and the company expects ratio to be 1.4 on 30th of September. That is the future covenants date. So we'll come back to this slide that on the first part, the company is saying on the reporting date, if we first need to check that on the reporting date, whether we are satisfying the conditions. So yes. So 30, what was the conditions that as on 31st March, you are supposed to have a working capital ratio of 1.5, but in reality, you have 1.6. So as on 31st of March, this liability will still remain as a non-current because you are satisfying the conditions existed on the date of on the reporting date. Now comes the future covenants. That is a future condition. So if you see, the agreement wants that as on 30th of September, your current working capital ratio should be 1.7. Now, whether that is getting qualified, for that, there is a specific line that the company expects the ratio to be 1.4 as on 30th of September. So, this is a pure management estimate. So, as we have seen in the last slide, that future covenants will not attract the classification, will not cause an issue in the classification. But yes, this will require disclosures that, for an example, if I'm signing financials in August month, take an example, I am signing financial on 23rd of August. So on 23rd of August, the management is saying to me that on 30th of September, that is the future covenants, I will not be able to meet the conditions given in the loan agreement. So now that will attract a disclosure. This liability for 31st of March will still remain as a non-current, but I am supposed to, as an auditor, I am supposed to check the disclosures that whether financial statement gives enough disclosures that in future that reporting entity will not be able to satisfy the condition, and hence those liability could become repayable within next 12 months. So this disclosures is required. Now, what is the future expectations of the management? Is it relevant? So ideally, there is no relevance that this management, whatever they estimate, does not have any relevance. Now, take another example that on 30th of September, you are signing a financial statement, and as on that date only, you can verify that the current ratio is 1.4 only. And for 31st March, the company was satisfying the criteria. But post that on the date of signing, and which is also a future covenant condition date, the company is not able to meet those particular criteria. So will that affect my classification? Again, it won't affect because it is a future condition for the reporting date. But yes, it will attract the disclosures that this loan could become repayable within 12 months. Now, whatever we have discussed, we'll see it is in the two parts. We'll see the first part. Lender, that is bank, agrees to demand repayment after the reporting date, but before the FS signed. So the lender, bank, take an example, Bank of Baroda has agreed that we will not demand the repayment, but that agreement happen on, take an example, 15th of April. So after the reporting date, but financial statement is yet to be signed. So now what will be the repercussion for the financial year ending on 31st March 2026? So that is very relevant for us that what will be the impact in today's this year's financial statement. So whatever we have discussed is applicable from 1st April 2026. So whatever we have discussed does not have any relevance? No. It will have a relevance in the next year, and that is why I have mentioned that this amendments looks simpler, but it is not simpler in reality. So till March 31, 2026, the liability classified as a non-current, because as of now we'll see a previous amendment only. So in previous amendment, it used to be that, for an example, if you are signing financial on 31st of May, and on that date your the reporting entity's bank has already agreed to waive that we will not demand the repayment. So in that cases, you can classify the same as non-current. The same thing will continue for this financial year as well. But from April 2026, the liability will be classified as a current, because that carve out, this was a carve out from IFRS. It remains for the financial year ending on 2026, but now from April 2026, it will be removed. Then we'll consider a second scenario that lender bank agrees to provide a grace period of at least 12 months after the reporting date. So in that case, the liability is classified as a current. That is the current scenario. Now, what is the major cause of concerns that as a practicing chartered accountant, you need to convey this to your client, that as of now, I have classified this liability as a non-current because the amendment is applicable from the next year. But what happens in the next year? So in comparative period of financial year 2025 and 25-26, so when we are preparing a financial statement for the year March, the 31st March 2027, 25-26 will become a comparative period, right? So this requirement will be applicable retrospectively. So if they have considered this as a change in accounting policy kind of a thing. So they have made it that this is Ind AS 8 becomes applicable. So what will happen? So during till 31st of March 2026, you will show this liability still as a non-current, but in 25-26, in 26-27, your previous comparative period will be 25-26, and for that period, this liability will become current. So you need to simply tell to your client that you were allowed to look good till March 2026, but from the next year you didn't look good, and that needs to be informed to your stakeholder. So this year it will be a non-current. It will become current in next year because you have not satisfied the condition. So your current ratio will get distorted. Your repayment capacity will get distorted. So for this year, you are supposed to convey this to reporting entity that this may happen. This year you are allowed to look good, but from next year, this will be classified as a current liability. So that is why this amendment is not as simpler as it seems, because in next year you are supposed to have a classification based on this year's criteria. So this thing we need to take in mind, that we at least inform this to the client that this is how it will look in next year. Now, the second part, Ind AS 7107, there are basically two amendments. So it talks about supplier finance arrangement. So that is SFA or supply chain finance or reverse factoring. These are the different names of that arrangement. So we'll understand through a chart. So what happens in a supplier finance arrangement? Make sure this is a supplier finance arrangement and not a trade receivable financing, because in most of the cases in factoring, it happens on a trade receivable, or bill discounting happens on a trade receivable. But this is a supplier finance arrangement. So it is kind of a financing based on your invoices. So what happens that in first cases, my supplier supply goods to a reporting entity, that is customer, and then I ask my bank to make payment to my supplier, that is my trade payable, and after certain time, based on the agreed date and terms, reporting entity will pay amount to the bank. So in SFA, one or more factors, that is lender, agrees to pay amounts to a supplier in respect of invoice that the entity, that is the borrower or customer, owes to the supplier. The entity, that is the borrower, reporting entity or customer, agrees to pay to the factor on the same date or on the later date. Compared to the original invoice due date, this arrangement provides an entity with an extended terms or benefit to the supplier with an early payment. So there are two benefits: extended terms for the reporting entity or early payment to the supplier of reporting entity. This is often referred as a reverse factoring, and supplier finance arrangement usually involve three parties, that is customer, factor, that is bank, and the supplier. Now, what has been amended? So this was the general brief about supplier finance arrangement. Now, what has been amended? So the revised requirement introduced an additional disclosure. So there is practically no change in the computation as we have seen in Ind AS 1. Here, the focus is on a disclosure part. Now, the revised requirement introduce additional disclosure for entities entering into SFA that meets all of the following conditions. So the the scope of the amendment which we are going to discuss will become applicable to you if and only if if and only if the reporting entity is satisfying all of the three conditions. What are those three conditions? The first, the bank settles the amount owed by the purchaser to its supplier. Fine, no point of discussion. The reporting entity commits to repay the financing party based on the agreed terms, either on the same date as the supplier payment or at a later point in time. Nothing to discuss about. The third part, the arrangement results in either extended payment timelines for the entity or enable supplier to receive payment earlier than the original invoice due date. So it basically talks about that there has to be some kind of benefit that must be passed on from the factor from the bank to supplier or to the reporting entity. How to a supplier? By way of early payment. For an example, normal terms that supplier have is take an example 75 days, but bank the factor is making payment to them in a 45 days. So there is a benefit of an early payment. And what is the benefit that the reporting entity gets? That in normal terms, they are supposed to pay to the supplier in a 75 days, but they have entered into an agreement with the bank or the factor that we will pay you in 120 days. So there is an extended payment terms for the reporting entity. So this needs to be take care in mind. For an example, there may be some of the scenario in which practically nobody is getting the benefit, but just to make sure that reporting entity does not have a different does not have to deal with the different supplier, they make an arrangement with the bank. So on the same date, the bank makes payment to the same, and reporting entity makes payment to the factor. So in those cases, there are practically no benefits passing on either to a supplier or to a reporting entity. So in those cases, this amendment, the disclosure requirement won't be applicable. So keep that in mind. Now, these amendments are not applicable to arrangement involving the financing of receivable or inventory. This is quite simple. This is about the financing on the supplier's invoices. Now, what is the disclosure? We have talked about the scope of an amendment. That in following three cases, following three, if you are satisfying three conditions, the disclosure requirement will become applicable to you. Now, what is the disclosure requirement? So they have changed two Ind AS, that Ind AS 7 and Ind AS 101. So impact on liabilities and cash flow will be governed through Ind AS 7, and exposure to a liquidity risk that will be governed through Ind AS 107. Now, what we are supposed to disclose? So disclosure will be in two parts. One is qualitative information and another is a quantitative information. So qualitative information basically talks about the terms and conditions, that it is kind of a fact based of scenario, that these are the arrangement reporting entity has with its factor and the suppliers. So and for that, if they have provided any kind of securities or guarantees, and if there are some of the terms which differ significantly. For an example, in normal terms, you are supposed to pay to supplier in 45 days, but bank is allowing you 150 days. So if there is a different significant difference in the term, you are supposed to disclose it. So qualitative information talks about, you are just supposed to give a fact of the case, that this is how reporting entity function with the supplier finance arrangement. So it is a fact based reporting, nothing, no much ado into it. Now, you are also supposed to give a quantitative information. Now, that quantitative information has to be given at the beginning and at the end of the reporting period. So, for 31st March 2026, we have to give this kind of an information which we will discuss as on 31st of March and as on 1st April of 2025. Whether it will become applicable or not, we'll see on a later part. But what we are supposed to disclose, we are supposed to discuss liabilities covered, that is carrying amount of liabilities under such arrangement and mapping with balance sheet line item. So this particular clause talks about a trade payable. So what is the trade payable under such arrangement? So out of, to take an example, company has a trade payable of 2000 cr, but all of them will not be subject to supplier finance arrangement. Maybe 1500 crores will be subjected to this kind of an arrangement. So we are supposed to say, so that out of 2000, 1500 is subjected to supplier finance arrangement. mapping with the balance sheet item. So it is obviously trade payable. Then the second part, amount settled by the financer. So it is basically bank that has settled the amount. So portion where supplier already paid the finance provider. So out of 2000, 1500 was were subject to the supplier finance arrangement, and out of this 1500, 1200 is already settled by the financer. So in this case also you will show the carrying amount which has been settled and associated line item, mostly trade payables. Then we will disclose the payment timeline. So what we will disclose, the range of due dates, supplier financial liability, comparable trade payable. This is also one of the interesting part, that you are supposed to show a comparable trade payable. Now, what is comparable trade payable? So those payable, this SCF means supplier finance, supply chain finance, which is also same as supplier finance arrangement. You are supposed to show that these are the trade payables, comparable trade payables, and it has to at least disclose that there has to be some kind of benefit that is getting passed on to my supplier. So comparable trade payable has a 45 days of period, but this supplier chain finance creditors trade payable has a 25 days. So there is an early payment benefit. So you are supposed to show the comparable trade payables and their payment timelines. And explanatory information if the payment ranges are wide. So you are supposed to explain why payment ranges are wide. So we'll understand. This was a kind of a theoretical aspect. Now we'll understand the same with the example. Now this is a quantitative disclosure sample. We have discussed this particular part, the trade payable forming part of supplier finance arrangement, 2,500, out of which the amount is already settled is 1,800. Now the range of payment due dates, the liability under supplier finance arrangement is 45 to 75 days from the date of invoice, and comparable trade payables which are not under such arrangement, that is 25 to 45 days. So we are supposed to give a range, but make sure your range, the comparable trade payables payment due date has to be on a lesser side, or on a lower number of dates as compared to the liabilities which are under supplier finance arrangement, because that is when this kind of a disclosure will make sense. So this is a kind of a disclosure we are supposed to give. Now, this kind of a disclosure is not applicable in the first year of applying this amendment. So if you are giving a disclosure as on 31st of March 2026, because this is applicable from 1st April 2025. So this will be the first year in which you will apply this amendment, right? So on the first year, you are not supposed to have a beginning of the reporting period disclosure, because practically it is not possible to go and trace back that these are trade payable which are subjected to say supply chain finance. These were already paid. What were the normal payment range of payment due dates? It is practically not possible. So considering the technical impossibility, MCA has given a relaxation that beginning of the reporting page of previous preceding period disclosure won't be applicable in the first year of an amendment. Now, what is the additional part that we need to take care in mind? That carrying amount of financially of which supply is already paid by the finance provider. So this 1,800. So for that we can have a direct confirmation from the bank that whatever management is claiming, whether it is true. Obviously, it can be verified from the books of account, but you can, as an additional layer of documentation, you can take a direct confirmation from the factor. Now the amount which is already supplied by the finance, already paid by the finance provider, my bank has already paid to my supplier under this factoring arrangement. Now whether it is a cash flow from financing activity or an operating activity, now that has not been classified, that has not been clarified in any of the amendments. So in most of the cases, if you treat this as a financing activity, because ultimately this was a part of your financing arrangement, so there may be an extreme scenario that your trade payable, what if your each and every trade payable was settled through a financing arrangement? So balance sheet will show a movement in trade payable, but your cash flow will not show any kind of movement in your operating activities. So that will be one of the area where you need to take care, and you need to be vigilant enough that how you are treating this under a cash flow. Now assessment is required under Ind AS 1 to reclassify it as a borrowing or to continue as a trade payable. Now this is also one of the interesting part, which is also not clarified during the in the amendment, that if risk has already been passed to the bank from the trade payable, then it becomes a borrowing as well. So you are supposed to, this was just to give a glimpse that this can be also additional responsibility on the head of statutory auditor, that you are supposed to cross check whether the company still owes the risk to a trade payable, or that risk has been transferred to a bank. If that risk has been transferred to a lender, to a factor, then it is a classic case of de-recognition of your trade payable and classification and recognition case of a borrowing. So make sure based on the agreement, based on the rights that you have, you classify it correctly, whether it is your borrowing or trade payable. Now, this was a disclosure and under Ind AS 7. Now, as we have discussed, that they have amended two Ind AS. The another is in Ind AS 107. So, in that cases, mostly you will have this kind of a disclosure. That one is liquidity risk exposure. That how this supplier chain finance or supplier finance arrangement affects the payment obligation. That in normal terms, we pay to my trade payable in 75 days, but under this, they will get payment in 45 days, etc., etc., whether it creates any kind of a concentration risk. So in most of the cases, what is the benefit of supplier finance arrangement? That the reporting entity does not have to deal with the thousands or hundreds of the supplier. They just have to manage the bank. But that has also its repercussion that now you create a concentration risk on one or two banks. So this is also you are supposed to disclose. Then you are supposed to disclose the maturity analysis that when this liability will fall due, my supplier has been paid by the factor, but this is when they will fall due. Whether any extended terms distort the maturity profile. So the extended period will improve your current ratio. But take an example that can have take an example of risk concentration, that you will have a dependency on few financiers. Take an example, you are taking this arrangement from a Bank of Baroda, and what if Bank of Baroda pulls the plug? Because ultimately they will have a right. So if they pull the plug, all of your current trade payable will become payable immediately, or you will have a kind of that will at least distort your maturity profile. So you are supposed to disclose this kind of a risk. So if bank withdraws the facility, it will create a kind of a liquidity hole. So it is kind of a risk-based disclosure. So it, as we have discussed, so Ind AS 7 talks about liabilities and cash flow, and Ind AS 107 talks about the liquidity risk. But this won't be the enough disclosures as of now. That MCA notification does not talk about where we are supposed to. What we are supposed to show has been clearly described under the amendment, but where we are supposed to show has not been described. But as an ideal practice, you can show the same under a part of trade payables, that under the schedules of trade payable, you can show that these are the trade payable which are subjected to supply chain finance arrangement. Then it is always advisable to have a separate note if you have this kind of an arrangement, then which describes everything about the supplier finance arrangement. Then under Ind AS 7, under the cash flow statement, you can disclose that these are the trade payable liabilities which has been moved into my balance sheet, but ultimately the risk my factor has already paid to them. So you are supposed to show that kind of a disclosure, and this risk based disclosure, risk profile disclosure under under Ind AS 107. So mostly there will be have a four areas where in the financial statement where you will have a disclosure. First is trade payable, then comes a separate note for supplier finance arrangement, then comes in disclosure under cash flow statement, and then comes Ind AS 107 risk profile based disclosure. Now, Ind AS 12, income taxes. So it is quite, this basically talks about a top-up tax. So as we are aware that there is a Pillar 2 legislation. So we'll spend a few minutes on what does this Pillar 2 legislation and why it has an impact on under Ind AS. We'll spare a few minutes on it. That Pillar 2 legislation, it aims to ensure minimum 15% tax. Now, this tax is an effective tax rate, not just the tax, so ETR, on the profits of large MNC. So as of now, Pillar 2 is applied to MNCs which have a multiple jurisdiction, operation in multiple jurisdiction, and they have a turnover consolidated revenue greater than 750 million euro. So if you convert into an INR, it will come at around 8,200 crore. So if you are happen to auditing the reporting entity which has a global turnover exceeding 8,000 crore, then it will become applicable to you. If you are not into an audit of a company which does not have 8,000 crore turnover, you can freely go and have your time for the next 2 to 5 minutes. So it applies irrespective of the jurisdiction of operation. Introduce a top-up tax where tax paid is below the minimum level. So take an example, one of the subsidiary, you are auditing A Limited, and which has a subsidiary in Dubai or UAE. Now UAE will have a lower taxes. Take an example, they have effective tax rate of around 9%. Now I'm talking about effective tax rate. So effective tax rate includes allowances and disallowances under income tax. I am not an expert of taxes, but this is what I have learned for this particular top-up tax and its impact on the deferred tax. So now coming to the our example that Dubai have a tax rate of 9%. Now considering allowance and disallowance and another free trade zone and exemption, the company that subsidiary effectively pays only 8% of taxes. So now the question comes, what about this Pillar 2 legislation? That Pillar 2 legislation at least mandates that on a globe ETR, that is effective tax rate, has to be at least 15%. It cannot be below 15%. So now it creates a kind of a nitty-gritty and it creates a kind of difficulties when you are calculating any deferred tax, because as we know that there are two type of taxes, that is one is income tax and another is a deferred tax. So deferred tax is the future consequences of today's transaction. Now in these cases what happens is you need to at least an estimate that this will be my future tax outflow, considering that in future my first thing as a auditor, I need to take a comfort on the things that my future turnover will be greater than 8,000 crore. So that is one difficulty. Rest of the difficulties are bigger part of this, that I need to at least calculate this will be my future tax effective tax rate, and difference of this will be my top of tax. So it has a lot of estimates that has been involved into it. So now that has been taken care of through this amendment. Now, what has been changed? So, introduction of a temporary mandatory relief from a deferred tax accounting. So, if this is the case, you are not supposed to calculate the deferred tax, and this is a temporary but mandatory relief. So, you cannot say I will calculate a deferred tax on those aspects and will show in my financial statement. It is not allowed because it is a mandatory relief, though it is a temporary. But why they have kept temporary, I am not able to find the reason, because we'll see that. I was not able to understand the reason why they have kept temporary. Maybe they just want to have a wait and see approach mostly. This has been taken from IASB amendment, this international standard board. So they must be in a, they will watch the development, what development takes place in a global, this pillar two legislation, and then they will come with the proper solution. So, and this applies to the top up tax under Pillar 2 legislation. So now what this means? So as of now, you are not supposed to recognize a deferred tax on a top up tax. You are not supposed to disclose deferred tax related to such taxes, but must explicitly disclose that the relief has been applied. So here the focus is on disclosures over the computation. Now, what is the disclosure requirement? So disclosure requirement, it is applicable from the financial year 25-26. No disclosure is required in interim period up to 31st of March 2026. Now there are two parts. So before the top-up tax becomes effective, now it is a nitty-gritty of the law. So once law has been enacted, so rule book is already printed, so everyone knows that this is going to become a law, but the effective date has not been notified. So the law says that if the law has been enacted, you are supposed to be bound by that law. So you are supposed to check that these are my subsidiaries in which top of tax has become effective, but has not been effective, but it has been made inactive. So in those cases, what you are supposed to disclose? Same way in a supplier finance arrangement, qualitative information, quantitative information. So in qualitative information, it is again a fact-based thing, how that entity is impacted, jurisdiction where exposure may arise. So take an example in UAE. So you have multiple subsidiaries in UAE, France, or Germany. Maybe there may be some of the or Bahamas where effective tax rate must be lower than 15. This will be the jurisdiction where the exposure has arisen and where top of tax may be triggered. So in these are the cases, or these are the companies where top of tax will be triggered. Now comes the quantitative information. So what you are supposed to show. So it is based on very relaxing or very relaxed kind of and disclosures that has been required. So what you are supposed to show, the percentage of profit subject to Pillar 2. So you are not supposed to show the amount that these are the amount which is subjected, these are the amount of profit which is subjected to Pillar 2. You are supposed to show the percentage of profit. So out of 10,000 crores of profit, maybe 20 to 30% will be subjected to Pillar 2. Again, you are supposed to give a range and you are not supposed to have an actual percentage for the same. Now, what will the second disclosure? Average effective tax rate on such profits. So make sure that this amount is lesser than the 15%. So if it is more than 15%, you will not fall into the category of top-up taxes. Top-up taxes is basically 15% less the effective tax. So in the case of Dubai, we have seen Dubai has a 9% corporate tax. Now considering allowance and disallowance, your effective tax comes at 8%. Globe ETR, the Pillar 2 mandates 15%. So 7% is your top-up tax. So you are supposed to make sure your average effective rate is below 15% to fall into the category of this exemption. And then the third part, the impact on effective tax rate if pillar 2 were become applicable. So for an example, in case of a Dubai that we have taken an example, 8% is my top up tax. So if it becomes an applicable, then this will be an additional tax outflow, that is estimated effective tax rate in my financial statement. So you are supposed to show an estimated tax outflow as well. So percentage of profit, average effective tax rate, and impact on your tax if that pillar 2 will become applicable. So in impact, you are supposed to show an actual numbers. Again, you can give a range. You are not supposed to disclose the actual number. Now you can use reasonable estimate as we have discussed, or indicate range. You are not required to compute the exact liability. That is also we have discussed. Now, what if no information is available? Then at least disclose that the estimation is not possible as of now. But you are also supposed to show that this is the progress. This is where the company stands, and company is still thinking and still considering the effect of Pillar 2 legislation. You are supposed to show and disclose the progress as well. Now there comes the last part after top-up tax becomes effective. Take an example, Dubai has made that Pillar 2 legislation effective from 1st April 2026. Then this will become my current tax only. So why it becomes my current tax? Because I may be in a tax holiday enjoying 0%, or I may be a free trade zone of Dubai. I must be enjoying 0%, but at least Globe ETR, this Pillar 2 mandates it to be a 15%. So there won't be actual cash outflow, but due to this Globe ETR, there will be a 15% of the cash outflow, and we are supposed to show it as a part of our current tax expense. Now, Ind AS 21, foreign forex gain loss. It basically talks about an on exchange if you are not able to exchange your INR or foreign currency with the INR, so then this amendment gets triggered. So in this regard, in August 23, IASB has already issued an amendment in IAS 21, and in order to keep Ind AS converge with IFRS, MCA has issued similar amendments. And now these amendments are applicable from 1st April 2025. So based on that amendment, we'll follow a two-step approach. First, we will assess the exchangeability. So how we can assess an exchangeability, that whether this foreign currency is exchangeable or it is not exchangeable. So it is a two-step approach. In step one, entity can assess exchangeability based on few considerations like administrative delays, entity's ability to obtain a foreign currency regardless of its intent to do so. So in most of the cases, there may be some of the administrative delays. So for an example, you may get a foreign currency in 5 to 6 days. But take an example, due to political unrest or war, you are not able to get the foreign currency within normal and administrative delay. It takes at least 30 days to exchange your currency. So this is a classic case of this particular amendment, and you will fall into the category of this Ind AS 21 amendment. So if an entity can only obtain insignificant amount, take an example, you need a $5 lakhs, but you are able to only get $5,000. So you are you are only getting an insignificant amount of the currency. So it is considered as a not exchangeable. Now, once you identified that the currency is not exchangeable, then you follow the step two. So in that case is how you are supposed to estimate the spot exchange rate. So your exchange rate has to reflect the rate at which an orderly exchange transaction would occur between the market participants under prevailing economic conditions at the measurement date. So what if this amendment does not specify how you are supposed to calculate the exchange, estimate the spot exchange rate, but what you can do, that take an example 3 months back when the situations were normal, my exchange rate, take an example 100 rupees for 1 peso, take an example of Argentina. Now in Argentina, the inflation has been raised last 3 months, has been raised at 20%. So it becomes my estimable exchange rate. So I'll value that a peso at 120 rupees. Or in the parallel market. So take an example, there runs a parallel market in which you are able to get peso at 115 rupees per peso. So 115 rupees per peso will become your estimated spot exchange rate. So this is how you are supposed to show. So now what is the disclosure requirement? That entity must now disclose the nature and financial impact of the lack of extensibility, the specific spot rate used, and estimation process applied that we have discussed. Now this is a transition rule. Now there are transition rules. So restatement comparative of prior period. We'll understand this through an example. We need to just make sure that the restatement of comparative information for prior period is not permitted. Now we'll understand the same through an example that foreign currency receivable. Indian company has a receivable in a non-exchangeable currency, that is LC. Earlier it was valued at 5 lakhs rupees considering the official rate. Now on April 2025, the estimate has been revised, and based on the estimated spot rate, it becomes aware, you become aware that now only 3,50,000 becomes receivable. So 1,50,000 will be adjusted in your opening return earning. You are not supposed to restate your prior period financial. Same is the case with your foreign currency translation reserve. So if you have a foreign subsidiary and that foreign subsidiary has to is operating under those kind of conditions, though in such cases you are supposed to adjust whatever the difference in net assets in your FCTR, and you are not supposed to restate the prior period financial. Now, impact due to labor code. So, most of we are aware about the impact that this is the impact that this labor code carries. But we'll focus, considering the paucity of time, we'll focus on the important aspects. The third thing, the 50% proviso. So, if a specific excluded components like HRA, conveyance, or other allowance exceed 50% of total CTC, the excess amount is legally deemed as a wages. So this is very interesting thing. A few weeks back, I was talking with one of the persons. So they have a misconception that now the government has mandated that basic has to be at least 50%. Basic has to be 50%. Rest you can treat as another allowance. But government has played smartly. They have created a floor and not a cap. So if your basic is, take an example, 50% is very minimum. 50% is very minimum. So if your basic pay is greater than 50% of CTC, then statutory liability is on actual basic pay. So 50% or actual basic pay, whichever is higher. So they have smartly created a floor, and not they have not created a cap. One more thing, fixed term employment paradigm shift. So this was one of the contract they basically talks about on contractual employees. So in case of a contractual employee, gratuity will become payable even if they serve on a 1 year on your if they are serving for at least 12 months. One more interesting aspect, there is no grandfathering. So the code lack explicit grandfathering of the past service calculation. So if someone is retiring today, his or her gratuity will be calculated based on this revised labor code and not the older one. So there is no grandfathering. You cannot say that till 21st of November, till the time these labor codes were notified, I'll calculate gratuity based on old rules, and post that I'll calculate gratuity on new rules. It is not allowed. You are supposed to have a gratuity of that particular person, of that particular employee, based on the revised the new labor codes. Now, what is ICI has clarified in this? The ICI Accounting Standard Board has clarified that the sudden liability is increased in a plan amendment. So they have considered this is a past service cost and not an actual assumption change. So company make the reporting entity make claim that based on the revised labor code, we have already restructured our CTC structure, and that is why this is an actual change. So ICI is very clear. This is a past service cost, and you are supposed to treat the same in a P&L. So this was one of the reason in Q3, most of the service or technology-based company, take an example of Tata Technologies, they have around a profit of around 138 CR for Q3, and 122 CR was an exceptional item. So almost 90% of the profit was an exceptional item just because of this labor code impact. So there is no OCI option. You are supposed to route the same to pay P&L also. Those companies who are still into IGAP, for them, if this is a past service cost of a vested benefit will be expensed immediately. Those with the unvested benefits, so period which is yet to be served, that can be amortized based on the requirement. Now, leave encashment will not spend much time on into it. So, leave encashment will be debited to your P&L. There is absolutely no OCI option. If it is an IGAP or Ind AS, in Ind AS, there is no OCI option for the other long-term benefits. For IGAP and Ind AS, this will be treated. So whatever the impact leave encashment has based on the new this labor code. So mostly the wages definition, due to wages definition. So you will treat the same directly. You will debit the same directly into a P&L. So it will have a volatility in P&L. Now, where we should focus? So auditor must ensure that the deemed wages calculation strictly follows the section 2Y of proviso, and clients are not burying the financial impact in OCI. Financial statement for the transition year must quantify the past service costs resulting from the legislative changes. A detailed narrative note must explain the impact of new labor code. So at least give a disclosure that this is the amount which has been recognized as a past service cost and which has a major impact on the employee benefit expense. And because this is a non-recurring item driven by a change in law, entities should consider presenting a past service cost as an exceptional item. So if the amount is material and if it fits proper, that at least my stakeholder needs to know this, you can show this as an exceptional item. Absolutely, there is no bar into it. Now, change in small company definition and its impact. So what has been changed? So earlier, they paid up capital for a small company. To qualify as a small company, you need to have a paid up share capital not exceeding 4 CR and turnover not exceeding 40 CR. So paid up capital and turnover, both condition needs to be satisfied. It is not either or. Now that has been revised. So if your paid up capital is not exceeding 10 CR and your turnover is not exceeding 100 CR, you will qualify as a small company. Now the mandatory exclusion still remains. So if it is a Section 8 company, holding or a subsidiary company of any company, public companies or entities governed by a special act, so absolutely there is no change into that. So if you are happen to follow, if you are a holding or subsidiary company of any company, then you cannot be a small company. So absolutely there is no change in this criteria. Only the paid up capital and turnover requirement has been changed. So one third part, the interplay between Caro applicability and small. Now, how this definition will impact us, right? Because that is more important. That if it is going to impact me, I'll pay attention. So there is an interplay between Caro applicability and small company definition. So there are two schools of thought. So Caro is absolutely not applicable to small company, but Caro has another limit. So that limit is if your paid up share capital and reserve is less than 1 CR, uh, borrowing is at any point in time during the year is less than 1 CR and your turnover is less than 10 CR, then CARO is not applicable. So now it is creating a confusion that in small company the turnover requirement is 100 crore, but for a private limited company they specifically create another numerical thing that 10 crore turnover. If your turnover is less than 10 CR, then CARO, if it is greater than 10 CR, then CARO may be applicable to you. But in my view, if you are falling into the definition of small company, you are absolutely not supposed to have a Caro requirement. So as an auditor, you are not supposed to give Caro in my view because you are falling into another definition of an exclusion that is a small company. Only 2 board meeting per year. Cash flow statement is not required. So this is also one of the most important aspects. So if you are a small company, cash flow statement, your complete set of financial statement does not include a cash flow statement. So it will have a balance sheet and P&L only. So make sure when you are preparing this audit report and the reporting entity is a small company, at least in audit report only cover balance sheet and profit and loss, and make sure you are removing the cash flow statement. You are not just doing copy paste. So make sure you are removing cash flow statement from the financial statement. You are not signing the cash flow statement and removing the word cash flow statement from the your audit. No IFC reporting. Again, there is a confusion of IFC applicability. I will not go into much detail, but in my view, if it is a small company, IFC reporting in audit report is not applicable. Auditor rotation is not applicable. This is very important. Now we'll spare few. Just take a brief of ESU opinion. We'll not discuss ESU opinion in detail. I'll just mention the fact that what was the case that has been discussed under expert advisory committee. So the matter was involving that Metro has received a interest-free loan from the government. Now, as we know that in under Ind AS, Ind AS 109, you are supposed to have to calculate the fair value of this particular financial liability, that is the loan. So you will discount the fair value of that particular loan, and that undiscounting of that loan to a future period will create a finance cost. So the ESU opinion was sought that whether this notional interest cost, because actually there will be no financial outflow of the finance charges. So whether this notional interest cost will be capitalized as a part of my qualifying asset. So the opinion was, yes, you can capitalize the same if it is your qualifying assets, and any interest income earned from the temporary investment should be deducted from the borrowing cost eligible for capitalization. So even though it is a notional interest, you can capitalize the same provided it is your qualifying asset. Then change in ECL measurement technique. So there was one case in which company was valuing the ECL based on some ad hoc rate and based on their past data available with them. Now they want to shift to an actual method of doing ECL measurement. So they have sought an opinion of ESE that whether this is a change in accounting estimate or whether this is a change in accounting policy. So the opinion was that this is a change in accounting estimate only, because change in the measurement technique or model is a change in accounting estimate. This is because the underlying policy, that is the application of ECL model required under Ind AS 109, remains the same. This is a change in measurement technique rather than change in a measurement basis. So this is not a change in accounting policy. This is a change in accounting estimate only. So you will have a prospective impact of whatever the changes you may made in your ECL measurement technique. One more part that we have seen that small company has taken a very extra large leap. So if your turnover 100 CR and paid up capital 10 CR, IFC will not be applicable to you. So this is quite an interesting thing. You just go through the auditor's responsibility para in your auditor's report. In that the second or third para, it basically talks about this particular part, that obtaining an understanding of an internal control relevant to the audit in order to design the audit procedure that are appropriate in the circumstances and for the purpose of expressing an opinion on whether the company has adequate IFC with reference to the financial statement in place and operating effectiveness of such control. So it basically talks about two things. As an auditor, as a part of you are supposed to follow the standards on auditing, so you are supposed to obtain an understanding of internal control, that is irrespective of the level of enterprise you are auditing. But IFC reporting applicables if you are following into that criteria only. So if you are a small company now, make sure you are not using this particular word and for the purpose of expressing an opinion. You need to modify it and to show that and not for the purpose of expressing an opinion, because IFC is not applicable to you. So this was one of the major important part linked to the change in the definition of small company. We'll cover a second part of the key observation of the regulator, that borrowing cost has been capitalized. This is under Ind AS 7 or AS3, that is cash flow statement, that interest as a financing activity or it becomes an investing activity. So interesting thing, that borrowing cost, you have capitalized the borrowing cost. Now that borrowing cost becomes a financing activity or an investing activity. So Ind AS is very clear. It is a financing activity because cash went out because of financing, not because you bought an asset directly. However, under Ind AS, there is a flexibility. So based on the actual nature of the borrowing cost, you can treat the same. But if it is an Ind AS, it is purely a case of financing activity. One also, this was the observation of FRRB board, that incorrectly grouping the director sitting fees within the non-standard head. So basically, it talks about if the company, if you go through the Schedule 3 requirement, Schedule 3 talks about the minimum requirement. Under Schedule 3 requirement, if you go to other expense schedule, it basically creates a specific line item for a director setting fees. So you are supposed to show director setting fees separately, and you cannot bury them under the head of uh, other expenses. So Schedule 3 talks about a minimum requirement. So if that minimum requirement has some kind of a line item, you are supposed to show that line item specifically in your financial statement. Then comes this last part, single statement entities omitting geographical or product-wise revenue disclosure. So if you refer to Ind AS 108 paragraph 32, it requires even a single statement segment entity to disclose revenue from the external customer for each product and services. So this is also one of the important parts. But in most of the cases, you will see that companies operating only under pharmaceutical segment and hence disclosure under Ind AS 108 is not applicable. But that is not the case. You are supposed to have external customer. If some of the customer is representing more than 10% of your total revenue, you are supposed to show them separately. You are supposed to have a geographical disclosure as well. Okay, there are some of the interplay of the information available from the financial statement. I just want you to give an attention to this particular third point. So debtors aging, disputed debtors, and its effect on the provision. So now we have seen that in under Schedule 3, you are supposed to have aging of debtors and creditors. So make sure your debtors aging coincides with the provision for doubtful debt. So there may be some of the cases where debtors were outstanding for more than 3 years, and probably you will see the case that you have not created a provision or entity has not created a provision for expected credit loss, or if it is an IGAP, the doubtful debt. So if that is the case, make sure you have a reason, sound reason for the same, that why you have not created a provision, because these are the things which talks within the balance sheet. Even regulators don't need to go through the books of account. This is very visible from the financial statement only. Same is the case with MSME classification. So there may be some of the MSME classification, MSME creditors which are outstanding for more than 1 year or 2 year or 3 years, and correspondingly there is no interest provision under the MSME creditor schedule. So make sure you are not falling into those kind of thing. And if your MSME creditors are more than 45 days or more than 1 year, at least there has to be interest expense appearing in the financial statement, because that is what clearly interlinks your financial statements two item within the one segment, right? So this was it. So thank you, that was from me. Thank you all for your patience listening, and thank you team WRC for giving me this opportunity. I hope I was able to add value to your time, because money is visible, that is why we protect it, but time is invisible, so you tend to throw it away. But I hope I was able to add some value to your time, and you get something new out of this. So thank you everyone.
Thank you, Himesh ji. Really appreciate your ekdam smooth flow of whole session, which will definitely help all the members in their closure of books of accounts.
Thank
On
you.
behalf of WIRC, all the participants, I extend my wholehearted thank to our learned speaker, Mr. CA Hitesh Gajjar, for his valuable time, excellent session, which will definitely help all the members and your all support during this session. I request CA Varun Fitter to please continue with his second session on GST year-end compliances with respect to GST is concerned.
Thank you, Rajesh sir. Am I audible?
Yeah.
Okay.
You just make it full screen, your PPT. Okay.
It is now on full screen?
Yes.
Okay. So, first of all, Himesh, excellent groundwork. And now my role is to set the ball rolling from the financials reporting to the GST, where the same numbers or the same figures are viewed differently from the GST lens. So, dear friends, the today's topic which is being given to me is a GST key consideration. Friends, whenever we discuss about the year and GST key consideration, there are two important things we need to understand. First is we need to close one financial year and we have to get ready for the another financial year. When I say we need to close one financial year, that is financial year 25-26, we need to ensure that it is closed properly. And at the same time, we should be ready enough for the financial year 26-27 for the day one itself. So with this background, our today's session is divided or managing both the financial year, where we will ensure that financial 25-26 is closed cleanly and financial 26-27 begins with the clarity and control. Friends, before I start my session, I would like to share or clarify the thoughts about today's session. When I was preparing for the session, I have tried my level best not to just follow a checklist exercise. Rather than we will go deep dive into the provisions of the respective task to be done, possible solution, possible problems, and possible practical solution for that issues. So I can share my thoughts for the session in a simple line, saying that we should be aware of what we are doing right now, and we should be also aware of why we are doing this and what happens if we don't follow that. With that background, let's move to the topic. As I already discussed, it's GST year-end key consideration is all about the two aspect, preparing for the financial 26-27 and smooth closure of financial 25-26. We will first discuss about the foundation part. There are certain activities which needs to be done before the commencement of the financial year 26-27 so that we can effectively be compliant and control entire financial year GST legally from the day one itself. So this preparation are mandatory obligation under the GST, either act or rules or a notification, and it has to be implemented for the purpose of ensuring a day one operational readiness. The first and foremost part is letter of undertaking. सो आप सबको लगेगा कि लेटर ऑफ अंडरटेकिंग इज सिंपल, RFD 11 फाइल कर दो जीएसटी इन पोर्टल, उसमें क्या इश्यू है, उसमें क्या डिस्कस करना है। तो फ्रेंड्स, लेट अस फर्स्ट डिस्कस लीगली कहां पे लिखा है कि लैब को एलयूटी फाइल करना पड़ेगा। यू हैव टू फाइल द RFD 11, व्हाई यू आर फाइलिंग दैट। So when we are discussing about the LUT, the first and foremost rule that comes to our mind is Rule 96A1. 96A1 puts a legal obligation on the person who is wished to engage in the supply of goods, zero rated supply of goods or services, to file a letter of undertaking in form RFD 11 before the government authorities. We all know this is to be renewed every yearly and it is to be done on the GST portal. Earlier, it was required to, in the initial year of the GST, it was required to be filed in a physical mode, but currently it is very much clear that it has to be filed online. लिखते क्या है RFD 11 में, क्या अंडरटेकिंग देते हैं, दैट इज वेरी मच इंपॉर्टेंट फ्रेंड्स, बिकॉज if any of the condition or if any of the aspect of the what is mentioned in letter of undertaking is not satisfied, you or your taxpayer or your client will end up paying the tax along with the interest. So when you go and check the RFD 11 form, you will realize that you are specifically giving a declaration under Rule 96A1 that we will pay the tax along with the interest in specify along with an interest in 50 along with the interest under section 50 for two aspects. First, in case of export of goods, if goods does not leave India within 3 months from the date of invoice. सो अगर आप यहाँ से कोई गुड्स भेज रहे हो, वो पोर्ट पे पड़ा है, कंसिडरिंग करंट वॉर सिचुएशन, दिस विल बी वेरी मच इम्पैक्टफुल और दिस विल बी अ वेरी अलार्मिंग सिचुएशन फॉर ऑल ऑफ दैट। कुछ स्टॉक जो आपका फैक्ट्री से निकल गया इनवॉइस बन के फॉर द पर्पस ऑफ एक्सपोर्ट, बट दैट गुड्स आर लाइंग एट द पोर्ट एंड हैज नॉट लीव इंडिया विद इन द पीरियड ऑफ 3 months फ्रॉम द डेट ऑफ इनवॉइस, as per Rule 96A, and especially the undertaking you have filed in RFD 11, you need to pay the tax within the 15 days after the expiry of 3 months. So अगर शिपिंग बिल फाइल नहीं होता है तो डिपार्टमेंट केम टू नो सिंपली इनवॉइस है, शिपिंग बिल नहीं है, गुड्स हैज नॉट बीन एक्सपोर्टेड, सो लायबिलिटी कम्स। Second important thing declaration which is under the Rule 96A1 is regarding the export of service. So in case of an export services, since it is an intangible, focus is more on the receipt of foreign currency rather than actual export of the services. So law is making clear that payment for such export of services must be received within 1 year or FEMA timeline, whichever is later. It is to be if that 1 year or FEMA timeline is not matched, you have to pay the tax along with interest after the 15 days or 15 days after the expiry of 1 year or FEMA period. How it is being tracked? It is tracked to the FIRC and BRC. So this was all about Rule 96A, which talks about the export of goods or export of services. सो विद दिस एक क्वेश्चन आता है कि रूल 96A1 बोलता है लेटर ऑफ अंडरटेकिंग फाइल करने का। रूल 96A1 क्लियरली सेज अबाउट द एक्सपोर्ट ऑफ गुड्स एंड एक्सपोर्ट ऑफ सर्विसेज। तो वेयर डज द SEZ exports are covered for the LUT? सो दैट सेकेंड थॉट कम्स टू अवर माइंड। 96A1 अगर एक्सपोर्ट्स की बात करता है तो SEZ सप्लाईज के लिए भी हम LUT यूज करते हैं, तो वो प्रोविजन कहां से ट्रिगर होता है? My friend, it is not through 96A1, but there is a specifically Rule 96A6, which says that the provision of Sub-Rule 1 shall apply mutatis mutandis even to the zero-rated supply made to the SEZ developer or SEZ zone without payment of tax. So even for the SEZ supplies, you need to follow this practice of getting the payment in time, of applying the letter of undertaking, and most importantly, in case of SEZ, you need to ensure that it is for the authorized operation of the business. नाउ द सेकंड मोस्ट इंपॉर्टेंट क्वेश्चन, SEZ में LUT फाइल कर दिया तो LUT से फाइल करने से सिंपली यू विल नॉट बी एलिजिबल टू क्लेम दैट बेनिफिट। ओवर एंड अबव द LUT कंडीशन, देयर इज वन मोर कंडीशन अंडर द SEZ aspect is you have to get that goods or services evidence, documentary evidence on paper to prove that that goods or services has been used actually for the authorized operation. वो कैसे पता चलता है? इन केस ऑफ गुड्स सिंपली SEZ का जो ऑफिसर होता है, दैट स्पेसिफाई ऑफिसर गिव्स एन एंडोर्समेंट ऑन द गुड्स स्टेटिंग दैट दिस गुड्स हैज बीन रिसीव इन SEZ. सो एंडोर्समेंट बाय द स्पेसिफाइड ऑफिसर ऑन SEZ इनवॉइस इज जनरली कंसिडर्ड एज अ documentary evidence for proving the authorized operation of the goods. And for the services, as we all know, there is a separate list has been prescribed by each SEZ developer and unit for the authorized operation. Now let us discuss some issues for that. As we all discuss, time limit is for the purpose of export of service 1 year or FEMA time limit, whichever is later. So what is that FEMA time limit? So FEMA has prescribed a time limit of 15 months from the date of export or invoice. So ideally क्या होगा वहां पे 1 year और FEMA time limit. FEMA time limit is 15 months. So whichever is later में 15 months will become the time limit to get the funds in case of an export of services. Now, when you refer to the provision of FEMA, there are in some of the cases, FEMA law allows you to get the extension for the purpose of delayed receipt of payment. That extension application will also be considered under the GST as an extension for the purpose of provision of Rule 96A1 as well. सेकंड मोस्ट इम्पोर्टेंट टॉपिक अबाउट कि अगर रिसिप ऑफ पेमेंट आईएनआर में आता है तो चलता है. वी हैव लर्न सम सर्कुलर आया है कि भाई हाँ आईएनआर करेंसी में भी अभी पेमेंट्स आता है तो चलता है. नॉट नेसेसरी टू बी रिसीव्ड इन द फॉरेन करेंसी और dollar. My friends, for that, I would like to bring your attention to the circular number 202-14-2023, which is 27th October 23. That circular has clearly says that expense remittance received in INR from the special Vostro account of a corresponding bank of the partner trading country opened by AD banks. So these are the legal requirements that Regulation 7.1 of FEMA foreign import and export trade policies chapter. If you read all these combined, the one conclusion I have drawn is INR receipt of payment in INR is a valid mode of payment as a foreign currency, but only if it is received in this format of Vostro account, which is being maintained by the bank. If it is not into the Vostro account maintained by the bank, but general receipt of INR directly from the foreign party, in my humble view, it will not be considered as a receipt of payment for the purpose of export of service condition. So I can simply say, otherwise not at all INR would be covered, but only INR through above given procedure received is allowed under for the purpose of FEMA, or sorry, for the purpose of export of services and consequently for the purpose of letter of undertaking. With this background, we completed the one aspect regarding the letter of undertaking. Most important part, which is a practical difficulty being faced by many of the members and taxpayers. Many a times it happens that आपने export हो चुका, LCZ में supply हो चुका, फिर पता चला अरे LUT तो अप्लाई किया ही नहीं है हमने. तो जब पता चलता है अप्रैल में एक्सपोर्ट हो गया, जून में पता चला LUT अप्लाई करना रह गया है, तो you file an LUT for that. So now the question comes whether the post facto filing of LUT will make that April-May exports legally valid for the purpose of the GST law. So friends, if you go and check Rule 96A1, the clear condition has been mentioned that it has to be filed prior to export. So if you ask me strictly legally by Rule 96A1, that export declaration in the LUT has to be filed before the export. But at the same time, I also invite your attention to the para 44 of circular number 125 by 44 by 2019, which was its old age circular 18 November 2019, wherein government has categorically said that it is emphasized that the substantive benefit of zero rating may not be denied where it has been established that exports in terms of relevant provision has been made. The delay in furnishing LUT in such case may be condoned. So for all these cases where there has been delay in filing LUT or LUT has not been filed at all, we can take that stand that this LUT filing is just a procedural lapse which cannot defeat the substantive law, and export benefits should be allowed. But most importantly here is we should make sure that export of goods and export of service, all definition, all other condition has been satisfied. With this background, let us move to the next topic, which is for the financial year 26-27. Rule 46B is clearly saying that a consecutive serial number not exceeding 16 characters has to be maintained. Last line, that number has to be unique for a particular financial year. So when I say unique for a particular financial year, it is always advisable कि financial year start होने से पहले आपकी ERP के system, आपका serial number should be updated of the invoices. You can maintain a multiple series for the same financial year, but it has to be unique for that financial year. Similarly, this aspect is being generally ignored by many of the taxpayer, that unique serial number series criteria requirement is also there for the invoices to be issued by ISD. So if you go and check Rule 54, you will find the same wording of Rule 46B, which says that even for the ISD invoices has to be unique for a particular financial year. So I can simply say that if you like, you may start a 2526 by 001, you can start 26 by 27001. That is the best practices. There were many doubt as to the second part. We can continue the sequence as well. So for financial year 25-26, it was serial number 1 to 1050. And from financial year 26, you can still continue from 1051. But the most important caveat is it has to be valid as long as it is not repeating. So my friends, if you say that invoice number from 1 to 1050 simply for financial year 25-26, and same is repeated from 1 to 101 or numeric 1 start onwards from 26-27, that will be a duplicate and non-compliance of the Rule 46B. Most importantly, it is not necessary. It has to be start from the one from financial year 26-27. You can start afresh from any numbers, but that has to be unique from the that financial year. Next question comes, what if it is not being followed? What if that sequence has not been changed from the financial year? So in my humble view, there will not be any problem unless and until there is no duplication of the numbers. So if that invoice number is repeating, same duplicate number is appearing in 25-26 and 26-27 as well, there will be definitely create a problem. Problem will be in a especially a technical part. सो टेक्निकल हार्ड स्टॉप कहाँ पे आएगा आपका GSTR1 में, जब भी आप सेम इनवॉइस नंबर विच इज बीइंग ऑलरेडी मेंशन फॉर 25-26, वो डुप्लीकेट आपको अलाउड नहीं करेगा. सो GSTR1 रिजेक्शन होगा. ई वे बिल तो एज वी नो वो ब्लॉक ही हो जाता है, सेम इनवॉइस नंबर डालना ही नहीं देता है. एंड ई इनवॉइस पोर्टल में सेम इनवॉइस नंबर जब आएगा तो इट विल थ्रो एन आउट. So the technical hard spot is specifically for the duplicate invoice number. So आप practically legally भी ये नहीं कर सकते duplicate number, and अगर गलती से हो भी गया तो it will be definitely highlight हो जाएगा आपका वन ई वे बिल या ई इनवॉइस में. एंड सेकेंड थिंग इज कि स्पेसिफिक कोई पेनल्टी प्रिस्क्राइब नहीं की है जीएसटी लॉ में, बट डिपार्टमेंट वी हैव ऑब्जर्व दैट डिपार्टमेंट और प्रॉपर ऑफिसर हैव अ जनरल टेंडेंसी ऑफ अप्लाइंग जनरल पेनल्टी everywhere where there is no specific penalty. So department may impose this 25,000 up to 25,000 rupees penalty. That is the second compliance needs to be done for financial year 26-27. Next compliance is for the composition scheme. We all know you can act as a normal person or you can avail the benefit of section 10, which is a composition scheme. Most importantly, in this composition scheme, if you wish to opt for the composition scheme from the normal person, you need to file the form CMP02 that has to be prior to the commencement of financial year. We have faced this situation in many cases where जहाँ पे ये फाइलिंग रुक जाता है या फाइलिंग अप्रैल फाइनेंशियल ईयर कमेंसमेंट पहले CMP02 फाइल करना था पर वो फाइलिंग रह गया, तो उसकी वजह से क्या होता है कि आप सब्सिक्वेंटली 1 अप्रैल स्टार्ट होने के बाद यू विल बी debarred from filing this CMP02, and by default you will be in the by default you will be into the normal scheme only. You will get that things. So once you go from the normal person to the composition person CMP02 along with the ITC form 03, you need to also file ITC 03 form which describes the you need to pay an amount or equivalent to ITC of inputs held in stock like raw material or traded goods, inputs held in semi-finished goods or finished goods, and capital goods. When we talk about the reversal of capital goods, it has to be calculated on pro rata basis, taking the number of life of capital goods as a 5 years, that is 60 months. Most importantly, this form, which is ITC 03, has to be filed within the 16 days of the start of the financial year. So typically it is around the 30th May 2026. Simple topic, doesn't require much discussion. So going faster then. E-invoice, where this is very much important. Friends, Rule 48.4 along with the notification 10/23 has made the E-invoice applicable for all those persons whose aggregate PAN based turnover exceeds rupees 5 crore. Now the basic question comes, 5 crore turnover, aggregate PAN based turnover is to be counted from which financial year? So it has been clearly mentioned in that notification, any time before your particular financial year, if at any time your turnover is exceeding rupees 5 crore, then e-invoice provision is mandatory. So say for example, your aggregate turnover for 25-26 is already exceeded 5 crore, you will be mandatory under an obligation for an e-invoice generation from 1st April 26 for all B2B as well as export transaction. Friends, what is most important is you have to generate the e-invoice portal login ID and password so that smooth business can be run from the 1st April 26 itself. Second part, सर ई इनवॉइस जनरेट नहीं करे तो क्या होगा? So for that, Rule 48(5) clearly says that every invoice issued by a person under Sub Rule 4 applies in manner जिसके लिए Rule Sub Rule 4 applicable है. If that invoice is any manner other than the manner specified, that invoice will not be treated as an invoice. So एक बेसिक कंडीशन ही है, जो इनवॉइस की है वो ही सेटिस्फाई नहीं होगा एंड यू विल नॉट बी कंसिडर्ड एज अ वैलिड इनवॉइस इश्यूअर. एज एन कंप्लायंस और एज एन आउटवर्ड सप्लाई, जो आप सेल कर रहे हो, जो आपकी आउटवर्ड लायबिलिटी है, उसमें तो वो इनवॉइसेस का अगर आप इश्यू नहीं करोगे तो वो इनवैलिड इनवॉइस हो जाएगा. बट आई वुड लाइक टू ऐड वन मोर पार्ट हियर, जहां पे भी अगर इफ वन सेज क्या जो ई इनवॉइस एप्लीकेबल है और वो इनवॉइस ई इनवॉइस नहीं है, तो दैट ई इनवॉइस विल नॉट बी अ वैलिड डॉक्यूमेंट. तो हमारे लिए इंपॉर्टेंट क्या हो जाता है, फॉर ऑल योर टैक्स पेयर्स और फॉर योर ऑल केसेस, फॉर इनवर्ड सप्लाई, सप्लायर लायबल टू इशू ई इनवॉइस स्टिल नॉट इशूड और नॉट अवेलेबल एज एन डॉक्यूमेंट विद रेसिपेंट, रेसिपेंट इज नॉट एलिजिबल फॉर आईटीसी. सो अपने सेक्शन 16 जाएंगे. 16 में 16(2) में देयर आर मेनी कंडीशंस फॉर द पर्पस ऑफ अवेलमेंट ऑफ आईटीसी. दैट इज वन ऑफ द कंडीशन, यू शुड बी अवेयर, यू शुड बी इन पोजेशन ऑफ द इनवॉइस. सो मेरे जो भी इनवर्ट सप्लाईज है, जहां पे अगर सप्लायर की लायबिलिटी आ रही है ई इनवॉइस जनरेट करने की और उसने ई इनवॉइस जनरेट नहीं किया है, मुझे सिर्फ प्लेन इनवॉइस दिया है, तो माय हम्बल व्यू इज इन दैट केस दैट प्लेन इनवॉइस विल नॉट बी अ वैलिड इनवॉइस एंड यू मे बी डिप्राइव्ड ऑफ योर आईटीसी इन योर केस. अरे सर, सप्लायर का एप्लीकेबल है, उसने नहीं किया तो हम क्या करेंगे? एज वी ऑल नो, द बर्डन ऑफ द चेकिंग हैज बीन कास्टेड ऑन द रेसिपेंट बाय द गवर्नमेंट. तो सर अभी रास्ता क्या है कि सप्लायर ने ई इनवॉइस जनरेट किया है, एप्लीकेबल है उसको कि नहीं? तो व्हेन आई वाज सर्चिंग फॉर दिस, वी कुड फाइंड दैट ई इनवॉइस के पोर्टल पे आप जाओगे, ई इनवॉइस पोर्टल हैज अ स्पेसिफिक ई इनवॉइस स्टेटस ऑफ योर टैक्स पेयर. So, as an financial year 25-26 closing exercise, and as a precautionary before creating a master in your ERP or before creating a new vendor on board, you may have a system of identifying that supplier from this GSTA portal whether e-invoice is required to be issued in his case or not. If that portal says that e-invoice is applicable on that, you must be ensured that e-invoice is available on your record for all inward supplies. That is most important. I am talking for this inward supply part and not the outward supply part. So that was the next third part regarding the e-invoice part. Moving to the next topic, which is the renumbering of your number of digits for the HSN. So if you go Rule 46 regarding the HSN or invoice, there is a proviso. Proviso clearly says that the board that is a CBIC board, on recommendation of GST Council by notification, specify the number of digits or HSN required to be mentioned on invoice. If it is to be mentioned in invoice, that will follow into the GSTR 1 and GSTR 3B and so on. So, by the powers of proviso to Rule 46, Board has issued in notification number 78 by 20 in past dated 15th October, wherein they have categorically said that if your aggregate turnover is 5 crore, 4 digit is mandatory, more than 5 crore, 6 digits is mandatory, and import and export code 8 digit is mandatory for all. Most importantly, where turnover is less than 5 crore, 4 digit can be skipped in case of B2C supply. B2B में वो mandatory रहेगा. My friends, this is most important part. When I say turnover of 5 crore, it is all about the aggregate turnover in a preceding financial year. So as we see in case of e-invoice, कि अगर 25-26 का turnover is exceeding 5 crore, सॉरी एक्सीडिंग 5 करोड़ ई इनवॉइस एप्लीकेबल हो जाएगा फ्रॉम 26-27. सेम वे अगर 25-26 का टर्नओवर 5 करोड़ से ज्यादा हो गया है, तो फॉर ऑल द इनवॉइसेस टू बी रेज फ्रॉम 1st अप्रैल Your invoice must mention 6-digit mandatory GST, mandatory HSN for B2B as well as for B2C supply, and which will follow the subsequently part. So that is why aggregate turnover of preceding financial year लिखा है तो 26-27 के लिए ये important हो जाता है. अब नेक्स्ट थिंग इज कि अगर ये HSN की रिक्वायरमेंट 6 डिजिट का था जो हमने 1 अप्रैल से नहीं किया, 4 डिजिट ही रह गया, तो व्हाट विल हैपन, कॉन्सिक्वेंसेज ऑफ नॉट फॉलोड. सो जनरल पेनल्टी, नो स्पेसिफिक पेनल्टी, सो डिपार्टमेंट विल ऑब्वियसली ऑफ गो फॉर अ जनरल पेनल्टी. एंड प्रैक्टिकल डिफिकल्टी इसमें ज्यादा होगी बिकॉज टेक्निकल हार्ड स्टॉप हो जाएगा. वी हैव अ फियर दैट सिस्टम GSTR1 वो एग्रीगेट टर्नओवर फॉर द प्रीसीडिंग फाइनेंशियल ईयर ऑटोमेटिकली कैलकुलेट करता है पोर्टल पे. सो उसके बेसिस पे इट मे not allow 6 digits 4 digit HSN level entry at GSTR1 for B2B और BTC transaction. E-way bill में mismatch आएगा and E-invoicing failure भी आ सकता है. So that is a technical hard stop. Legally वो 125 की penalty proper officer may impose. Yes, this is also very much important. Generally, this aspect is being neglected by many of the taxpayer. Rule 86B clearly states that in case of every person whose tax payment in a month exceed 50 lakhs rupees, at least 1% of tax needs to be paid by electronic cash ledger and balance 99% can be paid by the electronic credit ledger. सो ये फंडामेंटल सबको क्लियर है. पर इसका रेफरेंस ये फाइनेंशियल ईयर 26-27 के लिए अभी ये चेकलिस्ट में क्यों आया? माय फ्रेंड, व्हाट इज मोस्ट इंपॉर्टेंट इज दैट एक्सेप्शन. व्हेन यू गो टू द एक्सेप्शन, ये एक्सेप्शन क्या बोलता है कि अगर आप ये 3-4 कंडीशंस में अगर सेटिस्फाई हो सकते हो, इफ यू आर सेटिस्फाइंग ऑल एनी ऑफ द 3 or 4 कंडीशन, you will not be required to make a 1% payment through electronic cash ledger, meaning thereby you can pay entire 100% of the tax from the credit liability. So what happens, say for example take a B and C refunds. So वो क्या बोलता है कि if any person has received a GST refund of more than 1 lakh in a preceding financial year due to zero rated or inverted duty structure, that person will fall under the proviso to rule 86B, which will make him एलिजिबल टू मेक 100% पेमेंट थ्रू दी इलेक्ट्रॉनिक क्रेडिट लेजर. सो अगर आपने 25-26 में 1 लाख रुपए से ज्यादा का भी एक्स वाइज एक्सपोर्ट की वजह से इन्वर्टेड ड्यूटी स्ट्रक्चर की वजह से अगर आपका रिफंड आया है, तो यू एन एडवांटेज कि आप 26-27 एंटायर फाइनेंशियल ईयर के लिए यू मे चूज टू पे एंटायर 100% टैक्स लायबिलिटी थ्रू दी ITC. सिमिलरली इनकम टैक्स में अगर प्रोप्राइटर है या उसके पार्टनरशिप है तो उसका MD और एनी ऑफ द 2 पार्टनर और डायरेक्टर हैज पेड टैक्स मोर देन 1 लाख रुपीज इन देयर इनकम टैक्स रिटर्न, वो भी एक एडवांटेज आप चेक करके ले सकते हो. थर्ड D इज अ क्यूमुलेटिव कैश. इट इज ऑल्सो वेरी मच इंपॉर्टेंट. जहां पे भी अगर डिमांड डिपार्टमेंट का नोटिस आता है, यू कैन टेक शेल्टर अंडर दिस एज वेल कि अगर आपके क्यूमुलेटिव लायबिलिटी जब आपने पे किया है वो क्यूमुलेटिव 1 अप्रैल से लेके 31 मार्च तक फाइन करोगे, वहां पे 1% से भी ज्यादा पेमेंट का कैश में आ जाता है, यू विल बी स्पेयर फ्रॉम दिस रूल. See, friends, what is happening actually? We have started facing this situation in Gujarat, especially where department started issuing the notices for the purpose of violation of Rule 86B. They simply go and check our GSTR 3B returns for the entire financial years. They say, भाई आपने 1% टैक्स कैश में नहीं भरा, and they simply issue the notice either under the ASMT 10 or by way of a simple letter. Whether that notice is valid or not, that is altogether a different issue. For now, we have to define for Rule 86B. तो उसके लिए क्या होगा? So for all such notices, next question come, अगर ये follow नहीं हुआ तो what is the consequences? So for and first, when I was Rule 86B में 1% कैश में पेमेंट नहीं होता है, तो most severe or most authoritative power with the department is lying in Rule 21 small g, which is a suo motu cancellation by department. Rule 21 small g categorically says that the registration of a person is liable to be cancelled if said person violates the provision of Rule 86B. So, proper officer has a power, proper officer has a power to cancel your note number, GST number, suo motu if 1% provision is not met. So if you have received any such notices, try to find exception through the proviso to Rule 86B. If you are not able to find that any exception, then in my humble opinion, legally you are liable to pay that 1% cash. 1% amount paid in cash will be along with the interest at the rate 18%. and it may be possible that they may also levy a penalty, a general penalty up to rupees 25,000 for this Rule 86 being non-compliance. Now the next biggest question is कि अगर आपने 1% लायबिलिटी, हाँ, सो द क्वेश्चन वन पार्टिसिपेंट हैज रेज अ क्वेश्चन, इफ लायबिलिटी फॉर आरसीएम इज पेड, डू दिस काउंटेड फॉर 1% पेमेंट? सो दिस लायबिलिटी ऑफ आरसीएम इज टोटली डिफरेंट. दे आर सिंपली सेइंग दैट मंथली आउटपुट टैक्स लायबिलिटी अगर 50 लाख से, सॉरी, 5 लाख से ज्यादा है तो आपको कंपलसरी पेमेंट करना पड़ेगा. सो आरसीएम लायबिलिटी इज ऑल टुगेदर डिफरेंट, विच विल नॉट बी काउंटेड इन दिस 99% और 1%. कमिंग बैक टू द अवर थीम, सर चलो, वन नोटिस आया, 1% कैश भी पे कर दिया, इंटरेस्ट भी पे कर दिया, पेनल्टी भी समहाउ एस्केप कर लिया. पर सर वो जो पैसा 1% आईटीसी से तो हमने ऑलरेडी भर दिया है. वो आईटीसी इज नाउ एलिजिबल टू मी बिकॉज आई हैव मेड कंप्लायंस टू द रूल 86 बी. 1% कैश में पेमेंट हो चुका है. देन व्हाट इज सपोज टू बी डन फॉर दैट 1% आईटीसी विच हैज बीन ऑलरेडी यूटिलाइज थ्रू द जीएसटीआर 3? Any views? Anyone? Any idea? How can we get that? If you have any views or anything, you can put a pauser in chat. So this is my limited understanding and my study says that, see, अगर आपका आईटीसी 1% जो यूटिलाइज नहीं होना चाहिए था, अगर आपने कर लिया और 1% कैश में लेटर पेमेंट किया है मंथली, सो अगर वो 1% आईटीसी से पेमेंट हो चुका है, इन दैट केस यू लेफ्ट विथ नो ऑप्शन एक्सेप्ट टू गो फॉर द रिक्रेडिट ऑफ दैट अमाउंट टू द आईटीसी. सो आईटीसी का वो रिफंड आपको गवर्नमेंट नहीं देगा बिकॉज इट इज नॉट योर कैश लेजर मनी, इट इज एन आईटीसी अमाउंट. वो आईटीसी अमाउंट वर्स में वर्स केसेस में व्हाट डिपार्टमेंट कैन डू, वो डिपार्टमेंट आपको वो आईटीसी अमाउंट वापिस आपके क्रेडिट लेजर में जमा कर सकता है. क्रेडिट लेजर में जमा करने के लिए वो PMT03 नाम का एक फॉर्म होता है. टैक्स पेयर कैन रिक्वेस्ट द प्रॉपर ऑफिसर कि भाई ये 1% पेमेंट जो मैंने आईटीसी से पे कर दिया है वो कैश में करना था, ये कैश का मैंने पेमेंट किया है, उसका चालान है, DRC03 है. यू आर रिक्वेस्टेड टू जनरेट द PMT03 फॉर्म एंड क्रेडिट बैक द एंटायर 1% अमाउंट पेड थ्रू यूटिलाइजेशन ऑफ इलेक्ट्रॉनिक क्रेडिट लेजर बैक टू माई क्रेडिट लेजर. थोड़ा डिफिकल्टी फेस रहेगा बट वी हैव प्रैक्टिकली एक्सपीरियंस दिस. PMT03 के बेसिस में यू कैन गेट बैक टू योर अमाउंट बैक टू योर इलेक्ट्रॉनिक क्रेडिट लेजर. सो व्हाई आई एम डिस्कसिंग रूल 86B राइट नाउ इज मोस्ट इंपोर्टेंटली, अगर आपके फाइनेंशियल ईयर 25-26 के टर्नओवर या लीगल कंप्लायंसेस के बेसिस में इफ यू कैन गेट एनी ऑफ द एस्केप लीगली फॉर द फाइनेंशियल ईयर 26-27, you may find that right now. Second most important thing, ITC distribution by ISD. As we all know, ISD जो ITC distribute करता है वो distribution has to be done for the particular relevant period. Now that relevant period term has been specifically defined in Rule 39 explanation, which says that if the recipient of credit had turnover in that state in the financial year preceding the year during which credit is to be distributed, said financial year to be considered. So अगर आप 26-27 के लिए आप ISD में रजिस्टर्ड हो, आपको 26-27 में ISD का जो भी क्रेडिट डिस्ट्रीब्यूशन करना है, that will be based on the preceding financial year turnover, which is financial year 25-26. Now the biggest question, सर 25-26 है, अभी ईयर क्लोज होगा, जो बुक्स के हिसाब से टर्नओवर है वो लेना पड़ेगा या टर्नओवर हैज टू बी कंसीडर्ड एज पर द जीएसटी रिकॉर्ड्स? एनी व्यू ऑफ द मेंबर्स? फॉर द पर्पस ऑफ डिस्ट्रीब्यूशन ऑफ एन आईएसडी, द प्रीवियस ईयर टर्नओवर हैज टू बी टेकन. दैट प्रीवियस ईयर टर्नओवर एज पर बुक्स लेना पड़ेगा या एज पर जीएसटी रिकॉर्ड्स? एनी व्यू ऑफ द मेंबर or participant? See friends, in my humble view, this provision specifically, in my humble view, they are saying the word turnover in their states or union territory. If you go to the section 2112, which defines the turnover in state, which means aggregate value of all taxable supplies, exempt supplies, except export of goods or services, excluding taxes. So my view, the turnover as per the GST filed form, GST records needs to be taken as a basis and not the turnover as per the books of account. Many of the taxpayers make this mistake where they consider the turnover as per books of accounts for the purpose of distribution of an ITC. In my view, that is an incorrect way of distributing an ITC. टर्नओवर एज पर दी बुक्स ऑफ अकाउंट्स इग्नोर करना है और जीएसटी रिकॉर्ड्स का टर्नओवर लेना है. सर 25-26 क्लोज नहीं है तो कैसे ले सकते हैं? सिंपल, 1 फाइल किया है, 3B फाइल किया है, 1 3B में कोई डिफरेंस नहीं है तो उसका 12 महीने की समरी बना के उसका एग्रीगेट टर्नओवर विल बिकम अ basis for the purpose of distribution of next ITC by the ISD. So these are all general compliances is to be made for the purpose of getting ready for financial year 26-27. Now there are certain sector specific things to be also done before you enter into the financial year 26-27. I have covered basically two broad sector. First is GTA. As we all know, if any of your taxpayer or you are engaged in a goods transport agency services, you have an option whether you want to go for the reverse charge mechanism, that is RCM, or a forward charge mechanism, that is an FCM. So say for example I am a GTA, I have an option कि भाई मैं GST में रजिस्टर्ड नहीं होगा और फॉर एग्जांपल मैं रजिस्टर्ड होता हूँ तो आई विल नॉट कलेक्ट एनी टैक्स फ्रॉम एनी ऑफ द कस्टमर. आई विल सिंपली इश्यू एन कंसाइनमेंट नोट विद स्टेटिंग दैट रेसिपिएंट इज लायबल टू पे. अगर आप परचेस कर रहे हो मेरे से तो सॉरी, अगर आप मुझे फ्रेट का पेमेंट कर रहे हो, you simply need to pay, which is pay tax on the freight amount, that is a by default RCM option. We have observed that many a times when you go for the 5%, GTA को कोई IT से मिलता नहीं है, मैं कोई टैक्स कलेक्ट नहीं करता हूँ. तो nowadays it is a cost benefit analysis has to be done from the GTA aspect. अगर चेक करना है तो आप कर सकते हो कि भाई नहीं, मुझे RCM में नहीं जाना है, मुझे फॉरवर्ड चार्ज में जाना है. फॉरवर्ड चार्ज में जाना है तो यू हैव अ टू ऑप्शन. यू कैन गो फॉर अ 5% विदाउट ITC एज एन GTA and 18% with ITC as a GTA. So basically two broad part. One is an RCM part and second is a forward charge part. RCM is by default. If you wish to go for a forward charge mechanism, irrespective of a 5% rate or 18%, you need to file, or a GTA has to be specifically file Annexure 5, which is an opt-in form for the forward charge mechanism. It is to be filed on or before 31st March. It is being one time exercise is to be done. अगर आप एक बार एनेक्सर 5 फाइल कर दिया है फॉर 26-27, you will continue in 26-27 onwards, even for 27, 28, 29, 30, you will be continuing as a forward charge mechanism taxpayer only. The moment you feel that now I want to go back to the default rule of RCM, I don't want to collect any tax, at that time you need to find another form which is Annexure 6, which is an exit from RCM and going back to the, sorry, exit from forward charge mechanism and going back to the RCM. So to start the forward charge mechanism, you have to file Annexure 5. To stop the forward charge mechanism and going back to the RCM, you have to file Annexure 6. Whether to opt for the forward charge mechanism or a reverse charge mechanism in case of GTA is purely based on the commercial or cost benefit analysis. Many a times, many recipients or many GTA agency want to avail the ITC of trucks or tempos or the repairs and maintenance services relating to that truck or tempo. In that case, they need to go for the forward charge mechanism and tax has to be paid at the rate 18%. Recently, this rate has been revised from 12% to the 18%. So if any of your client or if you are a GTA, if you can evaluate this aspect of opting for a forward charge mechanism and you if you wish to opt, 31st March पहले एनेक्सर फाइल करना पड़ेगा. Next, most important thing, in case of restaurant services. See, restaurant can be an individual restaurant operating separately. कहीं एक कॉमर्शियल प्लेस पे कोई एक जगह पे रेस्टोरेंट ऑपरेट करते हो, यू गेट अ 5% टैक्स विदाउट ITC. आप 5% टैक्स कंपोजिशन में जा सकते हो या 5% टैक्स कलेक्ट भी कर सकते हो एंड यू ऑपरेट. मोस्ट इंपॉर्टेंटली, जहां पे अकोमोडेशन प्रोवाइड होता है वो वाले प्रीमाइसिस में जब भी रेस्टोरेंट होता है, then there is a different rate of taxes for that restaurant. So we all know hotel accommodation, hotel, if that hotel transaction value, not a tariff value, or a transaction value is less than rupees 7,500, 5% GST is charged by that hotel. For that, that hotel will not be eligible to avail an ITC. And if his room is more than 7,500, 18% GST will be charged. Most importantly, second and fourth, if that restaurant service and outdoor catering, restaurant, we read restaurant along with the outdoor catering, same principle applies outdoor for outdoor catering as well. So when restaurant along with the outdoor catering, if that restaurant is not within specified premises, 5% rate is applicable. If it is a specified within specified premises, 18% rate is applicable. My friends, this is very much catchy things. सो रेस्टोरेंट और आउटडोर कैटरिंग में अगर वो अकोमोडेशन के साथ वो प्रीमाइसेस में है तो आपको रेट चेक करना पड़ेगा एक बार, एंड रेट इज स्ट्रिक्टली डिपेंडेंट ऑन द डेफिनेशन ऑफ द स्पेसिफाइड प्रीमाइसेस. This is background is clear. Now, what is specified premises? So, when explanation to the said notification has clearly specified that one clause A is that when it is clearly stated that if any of your one room is above rupees 7,500, that entire premises will be declared as specified premises, which is an automatic hotel route, which is a mandatory. So, by default, आपके केस में रेस्टोरेंट जहां पे भी होगा विद इन स्पेसिफाइड प्रीमाइसेस जहां पे अकोमोडेशन मोर देन 7,500 इशू हुआ है, यू विल बी अंडर द 18% जीएसटी टैक्स ब्रैकेट विच इज विच इज द फोर्थ नंबर. फ्रेंड्स, मोस्ट इंपॉर्टेंट पॉइंट हियर इज व्हेन आई से 7,500 एक रूम भी जाता है, दैट 7,500 वन रूम क्राइटेरिया हैज टू बी लुक फॉर द प्रीवियस फाइनेंशियल ईयर. सो अगर आपका कोई टैक्स पेयर है या अगर आप एज अ टैक्स पेयर रेस्टोरेंट और अकोमोडेशन साथ में चला रहे हो और 25-26 में इफ एनी वन रूम इज सेल्ड फॉर मोर देन 7,500, वो प्रीमाइसिस में जो रेस्टोरेंट है, from 1st April 26 it will be under the 18% with ITC. It will not be under the 5%. It may be possible that 24-25 में आपका कोई भी रूम 7,500 से ज्यादा नहीं है, तो आप 25-26 में बाय डिफॉल्ट 5% रेस्टोरेंट में टैक्स पे करते होंगे, आउटडोर कैटरिंग में पे करते होंगे, दैट इज अलाउड. But if any one room is sold above 7,500 in 25-26, you have to be ready to charge 18% tax from 1st April 26, which is an automatic rule. Now it happens many a times. See, this 7,500 rate has been clarified very much by the government that it has to be what is charged from the customer. In case of this hotel industry, the rates are varying throughout the year. So it may be possible that one room you may get in one season at 5,000. That same room during the peak holiday times or peak times you may get at the 10,000. So the pricing keeps on changing. Considering this, the taxpayer may choose based on the cost benefit analysis to voluntarily opt for the 18% GST on that restaurant and outdoor catering. अकोमोडेशन तो बहुत क्लियर है, बट रेस्टोरेंट एंड आउटडोर रेस्टोरेंट एंड आउटडोर कैटरिंग में यू हैव एन ऑप्शन. यू कैन इवन दो एनी ऑफ योर रूम इज नॉट अबाउट द 7,500 इन प्रीवियस ईयर, you may still declare your entire premises as a specified premises voluntarily, and you may take an option of collecting tax at the rate 18%. जनरली ये लोग टू क्लेम द फुल आईटीसी ये प्रोविजन फॉलो करते हैं. इफ यू आर गेटिंग इनटू दैट सेकंड पार्ट बी, द ऑप्ट इन होटल ऑप्शन, द लॉ इज क्लियरली सेइंग दैट यू हैव टू फाइल एन एनेक्सर 7 बाय 31st March 26. सो वी हैव फेस दिस सिचुएशन. ये एनेक्सर 6, 5, 6, 7 अगर एक बार 31 मार्च खत्म हो जाता है उसके बाद आप फाइल नहीं कर सकते हो. सो फॉर दैट थ्रू आउट एंटायर ईयर आपके लिए वो ऑप्शन बंद हो जाता है. सो दैट इज वाई माई हम्बल रिक्वेस्ट, अगर आपका कोई जीटीए या रेस्टोरेंट वाला क्लाइंट है, इसमें यू गो थ्रू दिस प्रोविजन वंस अगेन, डू अ कॉस्ट बेनिफिट एनालिसिस एज टू द व्हाट इज आईटीसी अवेलेबल, व्हाट कैन बी यूटिलाइज, व्हाट कैन नॉट बी यूटिलाइज, एंड इफ यू आर नॉट फिटिंग इनटू दैट ऑटोमेटिक होटल मैंडेट of specified premises, you can think of getting an opt-in hotel premises and start collecting an 18% tax. So, out of these so many things available, I have tried to churn out only a few things for the purpose of 26-27 financial year, which are I consider as a most key consideration and relevant for the start of the business from the first day itself. Coming to the second part of the session, which is about the closure of the financial year 25-26. So when we discuss the closure, I can bet and I can firmly say that ये session अकेला 2 hours का ये part में I can discuss, because there are lot many things which you need to take care while deciding the closing the books of account of 25-26. But considering the paucity of the times, we have a limited time. I will try my level best कि जितना भी क्लोजली आपको समझा सकूं, क्लीनली समझा सकूं, वो हम कंसिडर करेंगे. फ्रेंड्स, वॉट एवर वी आर डिस्कसिंग नेक्स्ट ऑनवर्ड्स, these are the best practices action which you can do. It is strongly recommended, though not always explicitly mandated. So some of the things may not be explicitly required by law, but it is advisable to be done. So first, I always follow a principle that when I need to close the books of accounts, I need to broadly check three things. First, my output liability has to be correct. My input tax credit has to be in line with the section 16, 17, read with the relevant rules and notification, and my RCM liability and ICM ITC has to be correct. So, for today's session as well, I have divided the entire discussion or compliance for the purpose of this all three parts separately. नाउ सेकंड थिंग, अगर आप कुछ भी ये बुक्स क्लोजिंग के टाइम वेरिफिकेशन करोगे तो व्हाट यू हैव टू वेरीफाई, वेरिफिकेशन के लिए आपको डेटा चाहिएगा. व्हेन यू टॉक अबाउट द डेटा, फ्रॉम वेयर यू गेट ऑल द डेटा. सो आई सिंपली हैव अ लिमिटेड अंडरस्टैंडिंग एज टू यू कैन गेट द डेटा फॉर द पर्पस ऑफ वेरिफिकेशन. एक आपके पास रिटर्न्स और फॉर्म्स होता है, 1 3B 2B जो फाइल हुए हैं, ई इनवॉइस पोर्टल है, ई वे बिल पोर्टल है, जो आपके पास फाइल रिटर्न्स है, फाइल फॉर्म्स है, दैट विल बी अ बेसिस फॉर द वेरिफिकेशन फॉर द क्लोजर ऑफ बुक्स ऑफ अकाउंट. एंड at many of the points you can even go beyond the returns and forms to go and check your regular books of accounts, your balance sheet, your profit and loss account, your stock records. Nowadays, departments are started using the other financial proper disclosure, other financial details or disclosures made in the financial statement. This will also help you to identify and proper clean and neat closure of books of account. So as we said, entire discussion divided into three parts. First, we discuss about the outward supply. So outward supply में basic फंडा है, कोई liability भरने की रह नहीं जानी चाहिए. तो 1 में टैक्स भरा है, 1 के बाद वो 3B में टैक्स आता है, 1 के बाद 3B में टैक्स आ गया है. सो नेक्स्ट मोर फोकस फॉर अस इज बुक्स ऑफ अकाउंट, कि अगर बुक्स ऑफ अकाउंट्स में कोई ऐसी आउटपुट सप्लाई, आउटवर्ड सप्लाई अगर कहीं फॉल होता है तो दैट नीड टू बी कंसिडर फॉर द पर्पस ऑफ आउटपुट टैक्स. सो आउटवर्ड सप्लाई बुक्स में कहाँ कहाँ हो सकता है? तो रेवेन्यू फ्रॉम ऑपरेशन वी ऑल नो, इट कैन बी इवन एट द अदर इनकम. अदर इनकम में फॉर एग्जाम्पल इंटरेस्ट, इंटरेस्ट तो बोलोगे एग्जाम्प्ट है, बट इंटरेस्ट फॉर डिलेड पेमेंट receive वो taxable होता है, तो that may be at the other income which may to be taken. Third most important thing, many a times company has a system of offsetting your income against the expenditure. So you also need to refer to the credit side of an expenditure to identify any of the outward supply. Fourth thing, any of the deduction from your fixed asset may amounts to sale or transfer or write-off or disposal, which may be subject to the output tax liability. And fifth most important thing is you can check from the balance sheet if any goods are lying at the job work premises. If goods are lying at job work premises, you have to get back that goods within the prescribed time period of 1 year or 3 year back to your premises. If that time limit is already passed, you need to pay tax on that outward tax on that goods lying at job work premises from the date when it was removed. It has to be along with interest. So my limited understanding or my humble opinion says that outward supply can be anywhere in this books of account. You can check that. When we discuss about the outward supply, it is always advisable to consider a tri-party reconciliation, which is books versus GSTR 1 versus 3B. Friends, when I say reconciliation of 1 3B books, we all know we are doing this. Why it is important right now is because what happens, see, we all know GSTR 1 is now auto-populated and comes to the GSTR 3B automatically for the outward supply part. Now 1 हार्ड लॉक हो जाता है, वी ऑल नो. सो 1 में अभी कोई अमेंडमेंट अलाउड नहीं है. सो 1 में कोई अमेंडमेंट करना हो तो वी हैव टू डू दैट अमेंडमेंट थ्रू 1A. 1A का भी एक टाइम लिमिट है कि 3B फाइलिंग के बाद नहीं हो सकता है. सो आइडियली 1 की फिगर 1A के मिला के 3B में मैच हो जाएगी, बट दैट 1 3B इज ड्यूली मैचिंग विथ योर टर्नओवर एज रिपोर्टेड इन योर बुक्स ऑफ अकाउंट. दैट इज मोस्ट इंपॉर्टेंट. That is why we always suggest that turnover and tax liability reconciliation is to be carried out, and that has to be at invoice level. So B2B B2C separate check कर लो. अगर कोई invoices books में B2C में ऐसा मैंने कई बार होता है कि B2C में कोई invoice issue हो चुका, GSTR 1 3B में भी ऐसा B2C रिपोर्ट हो चुका, टैक्स पे हो चुका, उसके बाद सप्लायर ने नंबर दिया हो तो बुक्स में अपडेट हो चुका हो ऐसा B2B ट्रांजेक्शन, बट अमेंडमेंट में भी पेंडिंग इन GSTR 1 and 3B. GST law allows for the amendment window for financial year 25-26 will be open till 30th November. So it is very much important. Invoice level reconciliation has to be done. We all know GST 2.0 has brought new tax rates. So tax rates एक बार check करना पड़ेगा. क्रेडिट नोट डेबिट नोट इश्यू होना है जो भी आउटवर्ड सप्लाई रिलेटेड वो चेक कर लो. रिसेंट controversy which is being going on with reference to the credit note rejected by the recipient in that IMS portal. So सबको पता है IMS has been already in place. IMS में recipient has a right to cancel or accept the invoices and credit note. We have faced situation in many of the taxpayer where credit note is issued by the supplier. The recipient is rejecting that credit note. Any rejection of the credit note on IMS portal by the recipient, which will automatically add that credit note as my liability in GSTR 3B. सो इट इज़ वेरी मच इंपॉर्टेंट कि आप वो क्रेडिट नोट जो भी इशू कर रहे हो उसका आईएमएस पे एक्शन क्या आया है देख लो. सिमिलरली यू कैन ऑल्सो टेक डेबिट नोट जो आपका इनवर्स सप्लाई का आया है उसको देख लो कि वहां पे भी अगर आपको भी कोई रिजेक्शन का चांस है करने का तो वो कर सकते हो. My only thing is whatever the changes related to outward supply you feel that कुछ रह गया है कुछ बाकी है तो you can always do it in a March 26 GSTR itself. What will happen that अगर वो हो जाता है तो this the books of accounts or auto populated GSTR 9 generated for entire 25-26 will be duly matching with your books of accounts and there will not be any spillover of the transaction to the next financial year. So this was all about the output part. Considering the time, I am not discussing the all the things. E-invoice versus books versus GSTR 3B you can do. E-way bill versus books versus GSTR 3B, B2B, B2B, B2C separately आप कर सकते हो. As I already said, ये टॉपिक ऐसा है कि जिसपे 2 to 3 hours मैं अलग से बोल सकता हूँ. But considering the time, I am skipping the few of the parts. Third point is very much important, which is being started all over the India. Specifically, Patna में चालू हुआ है. Kolkata has also started. Kolkata GST department has also started doing this thing. उन्होंने नोटिस और ASMT 10 में दे डू दैट थिंग. आपका आईटीसी विल बी फ्लोइंग फ्रॉम जीएसटीआर 2B बट स्टिल आप देखोगे तो जीएसटीआर 2A आपका जनरेट होता है. जीएसटीआर 2B में भी आता है. आपका कोई टीडीएस जीएसटी का कोई कटा हो तो वो आपकी एज एन इनकम दिखाता है कि आपका 1 लाख रुपीज का पेमेंट है जिसपे 1% पे टीडीएस आपका इतना टैक्स पेयर का किसी का कटा है. डिपार्टमेंट इज नाउ डेज यूटिलाइजिंग दैट अमाउंट ऑन विच टीडीएस हैज बीन डिडक्टेड बाय योर customer as a basis for the purpose of comparing your output liability in GSTR 1 and 3B. So वो सिंपली क्या करते हैं अप्रैल मंथ में आपका 2A या 2B में टीडीएस जो वैल्यू पे कटा है वो 10 लाख है पर आप 3B में मान लो कि 5 लाख पे ही टैक्स पे किया आउटवर्ड सप्लाई दिखाया है या जीएसटीआर 1 में आउटवर्ड सप्लाई सिर्फ 5 लाख ही दिखाया है तो वो डिफरेंस खड़ा होता है एंड डिपार्टमेंट हैज स्टार्टेड इशूइंग अ नोटिस बेस्ड ऑन दिस पैरा. In my humble view, this figure will never match with a simple logic that TDS liability जो deduct होता है customer करता है it is based on the payments made by the customer and not based on the accrual of the invoices whereas GSTR 1 and 3B में reporting होता है based on the invoices raised and not on the basis of payment. So we could get success in resolving this difference based on the detailed reconciliation. हमने एक detailed reconciliation submit किया जहाँ पे 1 में 3B में invoices कब report हुआ है उसके ऊपर TDS, GST या 2A या 2B में कौन से month में कटा हुआ है and thereby we were able to match or convince the proper officer for this difference between the 3B and TDS. सेकेंड लास्ट टैक्स ऑन क्लोजिंग बैलेंस ऑफ एडवांस रिसीव सर्विसेज वाले केसेस में बैलेंस शीट में अगर क्लोजिंग बैलेंस आपका दिख रहा है एडवांस रिसीव फ्रॉम द कस्टमर उस पे जीएसटी की लायबिलिटी आती है दैट नीड्स टू बी चेक. मोस्ट इंपोर्टेंटली अगर कोई सप्लाई ऐसा है कि जिसके ऊपर आप टैक्स पे नहीं कर रहे हो इधर ड्यू टू द एग्जम्पशन or either due to the SEZ provision, you make sure that all the condition of that exemption or all the condition of SEZ has been fulfilled. This is an opportunity for you to check that अगर नहीं होता है that मुझसे फॉर एग्जांपल SEZ में ऑथोराइज ऑपरेशन वाला थप्पा वाला कॉपी नहीं है पता चला वो ऑथोराइज ऑपरेशन का स्टैम्प वाला कॉपी SEZ ऑफिसर भी नहीं दे रहा है तो इन दैट केस यू मे इवेल्युएट एंड कंजर्वेटिवली और प्रिवेंटिवली पे टैक्स ऑन दैट अमाउंट सो आपका इंटरेस्ट का कॉस्ट बच सकता है. 1 3B का रिकंसिलेशन हमने बात किया. अगर हम खुद कर सकते हैं तो गवर्नमेंट भी डेफिनेटली कर सकते हैं. सो रूल 88C विच वाज इंट्रोड्यूस्ड इन 26 December 2 विच वाज बीइंग सेइंग दैट DRC 1B में नोटिस आता है 1 3B में लायबिलिटी में अगर डिफरेंस आता है तो यू नीड टू सबमिट योर रिप्लाई और इधर पे द टैक्स अमाउंट. अगर आप रिप्लाई सबमिट नहीं करते हो या टैक्स अमाउंट पे नहीं करते हो या रिप्लाई सबमिट करने के बाद प्रॉपर ऑफिसर इज नॉट सेटिस्फाइड विद दैट DRC 1B पार्ट. Most important, friends, note this part, last one. Sorry. The entire difference shall be recoverable in accordance with the provision of Section 79. They have also prescribed DRC 1D, Rule 142B. सो वन में 10 लाख लायबिलिटी दिखाया, 3B में सिर्फ 9 लाख पे किया है, तो गवर्नमेंट इस DRC 1B में नोटिस इशू करेगा एंड कंसिडरिंग दिस एज अ सेल्फ डिक्लेयर्ड लायबिलिटी, 1 लाख का शॉर्ट पेमेंट आएगा और वो विदाउट एनी शो कोज नोटिस दे विल डायरेक्टली प्रोसीड फॉर द रिकवरी अंडर सेक्शन 79 लाइक अटैचमेंट ऑफ योर बैंक अकाउंट विथ होल्डिंग योर रिफंड. So any difference between 1 and 3B has to be taken care, I would suggest, every month instead of going an year end reconciliation. When we talk about the ITC, in the ITC part, you have a lot many things to discuss, but I can simply say, if I need to conclude in a summary, friends, 16.2 AA has been effective. Earlier, there were many debates. GSTR 2B is a valid form or not, 2A is a valid form or not. Government from the back doors via rule and via 16.2 AA has made it categorically clear that GSTR 2B is final Gita. You have to follow that. Rule 36.4, which was providing for the provisional ITC, has been also amended, saying that अगर वन में सप्लायर ने पे किया है और आपका 2B में दिखेगा तो ही आपको वो ITC मिलेगा. So right now, GSTR 2B versus 3B reconciliation and books. Invoice level reconciliation is mandatory to be done. वहाँ पे we don't have any option. There are many L&T construction and other high courts ruling as well, wherein the constitutional validity of the 2B is also upheld. So I would simply request कि ITC आता है, take 2B invoice level very much seriously. Even टेक सीरियसली इन अ सच अ वे दैट अगर आपकी कोई एंट्री, सॉरी, अगर कोई एंट्री सप्लायर ने आपके 2B में रिपोर्ट की है जो आपकी नहीं है, विच इज नॉट पर्टेनिंग टू यू एज अ टैक्स पेयर, even though you try to make a connect with the supplier and get it removed, because it may have an another implication or another consideration that way. So this is the ITC part. You can consider 2B 3B part, as we say rule 88C. Along with that, rule 88D is also there for the purpose of auto system generated notices for 2B versus 3B. The only change here is, here they can not proceed directly for the recovery of the amount. They will definitely have to issue a so cause notices either under section 73 or 74. We cannot say 74, but we can definitely say 73 में वो नोटिस इश्यू कर सकता है. किसी ने पूछा पार्टी पता नहीं है, तो दैट इज द मोस्ट इंपॉर्टेंट थिंग. अगर पार्टी नहीं पता है तो फाइंड फ्रॉम गूगल, AI समहाउ, बट यू ट्राई टू कनेक्ट विद दैट सप्लायर. वी फेस इन वन ऑफ द केस वेयर दैट वो अनअकाउंटेड और अनऑफिशियल और बोगस परचेस मान के अपने बुक्स में रिकॉर्ड नहीं किया, वो अननेसेसरी वो एलिगेशन पे जाते हैं. दैट इज व्हाई आई एम प्रेसिंग अपॉन दैट कि अगर वो एंट्री नहीं आती है, ट्राई टू गेट दैट रिमूव बाय कॉन्टेक्टिंग सप्लायर एट एनी हाउ. Other part, Rule 42 43 reversal, non-payment. Most importantly, two things I would like to highlight here. Uh, uh, First thing is electronic credit reversal and reclaim statement. We all know there is a circular 170 which talks about the reporting of an ITC, जहाँ पे आप carry forward, brought forward, प्रॉपर रिपोर्ट करना रहता है. वो रिपोर्ट में आप टेम्पररी रिवर्सल दिखाते हो, फिर उसको रिक्लेम करते हो. सो रिवर्सल और रिक्लेम का सिस्टम बैक एंड में जो रिवर्सल एंड रिक्लेम का स्टेटमेंट मेंटेन करता है, उसका क्लोजिंग बैलेंस एवरी 31 मार्च को आप रिव्यू कर लो. यू मस्ट बी हैविंग एन इनवॉइस लेवल डिटेल्स फॉर दैट क्लोजिंग बैलेंस. व्हाट वी हैव ऑब्जर्व कि आप 31 मार्च 26 का बैलेंस देखने जाओगे तो पता चलेगा 23 24 की भी एंट्री पड़ी है, 22 23 की भी पड़ी है, फॉर एग्जाम्पल. इट वॉज नॉट इफेक्टिव दैट पीरियड, बट अगर ऐसा पॉसिबल होता है, why it is happening, अकाउंटेंट और वी और टैक्स पेयर एज अ प्रैक्टिस के 2B में दिखा है, बुक्स में इनवॉइस नहीं आया, तो एक बार टेम्पररी रिवर्सल दिखा के रिटर्न फाइल कर दो. ऐसा रिवर्सल दिखाते जाता है, ईयर एंड हो जाता है, हमारे पास इनवॉइस भी नहीं आता है, एंड इवन वी आर नॉट रिक्लेमिंग दैट क्रेडिट, और वो रिवर्सल एंड रिक्लेम स्टेटमेंट में पड़ा रहता है. इट इज वेरी मच इंपॉर्टेंट कि वो रिवर्सल एंड रिक्लेम क्रेडिट स्टेटमेंट में से वो अमाउंट को आइडेंटिफाई करके, इफ यू आर नॉट गोइंग टू क्लेम दैट क्रेडिट इन फ्यूचर एज अ रिक्लेम, then it has to be reported as a permanent reversal so that the balance can be in a electronic credit reversal and reclaim can be an accurate fund. RCM में we all know 3B में liability of the RCM जो पे करते हैं, nowadays department has started comparing that liability with the RCM reported by the supplier and GSTR 2B. सर वो तो पहले भी करते थे. Now department is starting comparing tax head wise. सो सी और एस में आपका 2B में आता है 50 50 लाख 50 50 हजार, और आपने IGST में 1 लाख पे किया है, तो दे विल से नहीं भाई, गलत लायबिलिटी है. सो टैक्स हेड वाइज रिकंसिलेशन ऑफ आरसीएम appearing in 2B with 3B is most important. RCM liability and RCM ITC, we all know RCM liability and ITC register is also being maintained at the back end, like ITC electronic credit reversal and reclaim statement. That is also very much important. Most important part. When we talk about the RCM, in case of builder, we know 80-20 rule. 80% minimum purchases has to be from the registered person. वो follow करना पड़ेगा. डेडलाइन उसकी बाद में है 30th जून, बट इट इज एडवाइजेबल कि 25-26 में फाइनल करने के टाइम पे आप एक देख लो. देयर आर सम इश्यूज विथ रेफरेंस टू व्हाट इज टू बी इंक्लूडेड एंड व्हाट इज नॉट टू बी इंक्लूडेड. सिंपल एक फंडामेंटल है, अगर वो सप्लाई इज नॉट टैक्सेबल एट ऑल एंड दैट thing is not supply at all, it will not be considered for the purpose of overall limit of 80 or 20. Best example is salary. So salary will not be considered as an inward supply for the purpose of 80-20. Depreciation will not be considered as an inward supply. Even some remote or extreme explanation can be in a such a way that कि अगर आपका कोई सप्लायर है वो अनरजिस्टर्ड है पर उसका टर्नओवर 20 लाख से कम है, तो इन माय हम्बल व्यू वो भी कंसिडर नहीं होगा एज एन इनवर्ट सप्लाई बिकॉज टैक्सेबिलिटी फेल्स एट द सप्लायर लेवल इटसेल्फ. सो अ लॉट थिंग टू डिस्कस ऑन दिस, बट जस्ट कीप इन माइंड 80-20 रूल फॉलो होना चाहिए. अपार्ट फ्रॉम दैट अदर एस्पेक्ट इंटरेस्ट का लायबिलिटी देख लो. मोस्ट इंपोर्टेंट, आप एक बार आई वुड सजेस्ट एवरी ईयर में जीएसटी रजिस्ट्रेशन सर्टिफिकेट डाउनलोड करके रिव्यू कर लो. इट हैपन्स मेनी अ टाइम दैट कोई एडिशनल प्लेस बताना रह जाता है, कोई पार्टनर डायरेक्टर रिमूव हुआ है उसको रिपोर्ट करना रह जाता है. सो दिस विल डेफिनेटली गिव यू समथिंग कि कुछ मिस हुआ है. जीएसटी लॉ इज सेइंग दैट एनी अमेंडमेंट हैज टू बी मेड विद इन 15 days ऑफ द changes. So that has to be taken care. ITC 04, which is also being generally missed out. अगर 5 करोड़ से टर्नओवर ज्यादा है इन केस ऑफ जॉब वर्क ट्रांजेक्शन, तो आपको हाफ ईयरली फाइल करना है. 5 करोड़ से कम है तो आप एनुअली फाइल कर सकते हो. लास्ट बट नॉट लीस्ट, आई वुड से आप एक बार फॉर एवरी क्लाइंट और इफ यू आर अ टैक्स पेयर, आप एक बार अपना 25-26 का जीएसटी पोर्टल चेक कर लो. बिकॉज इट मे हैपन दैट मेनी नोटिस एडिशनल नोटिस हैज बीन इश्यूड, क्लाइंट ने इन्फॉर्म नहीं किया या आपको पता नहीं है. तो एक बार एटलीस्ट हैव अ प्रैक्टिस ऑफ रिव्यूइंग द नोटिस इन ऑर्डर पोर्टल वंस एज अ पार्ट ऑफ ईयर एंड एक्सरसाइज. दैट विल डेफिनेटली हेल्प यू टू गेट द अर्ली एक्शंस टू बी डन. So, whatever reconciliations or whatever things we are discussing, I can simply say that reconciliation is not merely matching numbers, it is resolving the discrepancy before the window permanently closes. So, without wasting much time, since we are having a paucity of a time and a many things to be discussed, I have tried my level best to give you the overview of and make you ready for 26-27, and especially giving you a food for thought for closing your 25-26. So firstly I would like to thank the WIRC team, CH Saurabh Ajmera sir chairman, Rikin Patel vice chairman, Bishan sir secretary, Rakesh Shah sir treasurer, and our Rajesh Agrawal sir chairperson, Vikasa, for the purpose of for giving me this opportunity. And most importantly to all the participants for sparing your valuable time to get into this discussion. And I hope that this session has been able to add some value to your thoughts, or some food for thought you may be carrying to your home. uh, these are my contact details available. I am always available for the fraternity and discussion. I can conclude with just only one thought, that I personally believe that in GST, clarity today will definitely avoid the complexity tomorrow. So let's take advantage of this transition phase of the financial year and make best out of it. Thank you so much. Jai Hind. Over to WRC team. Hello, Rajesh sir or any WRC team is available?
Yes, sir.
That's it from my side, sir. Thank you.
The question भी है sir.
Do we have a time to take questions?
Yes sir. Yes sir.
Yeah, okay. So first question is liability for RCM is paid counted for one person, as I already said, for the purpose of Rule 86B, 1% is to be calculated for the outward tax part. Is this restriction calculated monthly or annually? So what I understand is it has to be considered based on the monthly part. 86B is to be considered on a monthly basis. The law says that zero rated in a month exceed 50 lakhs rupees. So month, the word has been specifically used in Rule 86B. So definitely 1% is to be counted as per the. Yeah, I will share my PPT with the WRC team and Rajesh sir,
Yes,
definitely.
yes, yes.
Yeah, Rajesh sir is here. Yes, sir.
Sir, for your acceptance or your permission to upload the PPT,
Yeah,
we will upload your this presentation as well as video also on our YouTube and WRC website. So,
no issue, sir.
sir, I don't think there are much questions with respect to the session. Maximum are with respect to PPT only.
Yes, sir.
Mm. Very appreciated by many members. Very informative session explained with such
Yes, yes.
clarity. Thank you, sir. On behalf of WARC and all the participants, I extend my wholehearted thanks to Varun Bhai for your valuable time, excellent session, and all deliverable which you have covered in your presentation. Friends, it will definitely useful to all the participants in their compliances. I also thanks to our participants for their patient listening and active participation throughout this session. I also thanks to our chairman, secretary, vice chairman who has supported this program, our technical team who is supporting directly, indirectly all the uh, people who have supported this program. Yeah, this one of the question is why such a restriction to get INR receipts in Mastro account.
So that I need to get in touch with the Nirmala Sitaraman.
Okay, okay, okay. I can understand, sir.
So it is all about
Yes,
the
yes, sir.
like
Yes, yes.
government.
Thank
Basically, what I feel is उनको वो foreign exchange balance of payments maintain करने के लिए they must be doing that thing.
Yes, yes, yes. No, there is
Okay.
a all RBI's master circular. We have to
Yes,
comply
yes,
it.
exactly.
There is no controversial provisions in GST.
Yes.
Wherever they just refer to follow the RBI provisions.
Correct, sir.
Thank you, sir.
Thank
And
you so much,
definitely,
sir, for
yes,
giving me this opportunity.
yeah.
And thank you to all the participants for being sparing your time. Thanks a lot, sir.
Thank you.